Ladies and gentlemen, welcome to the midday market madness. Geez, I keep changing these names. I'll get it. Welcome, everyone. Hopefully, everyone's doing well on this beautiful Monday morning. As NVIDIA, some stocks are doing well. NVIDIA's doing okay. BMNR is up 2.8% roughly. That means Ethereum's usually up 3,100 on ETH. Bitcoin holding, actually not holding above 90,000, falling below 90,000, 89.9, where as MicroStrategy, we'll talk about them in a second, just started acquiring Bitcoin again. Another 10,600 Bitcoin has been acquired to a total of 660,000 Bitcoin on the balance sheet. Pretty insane. Michael Saylor continues to be bullish. And so MicroStrategy is up, or strategy, I should say. They got to adjust the ticker, right? They adjust the name, but not the ticker. It's still got the M in front of it, so it confuses me sometimes. Hopefully everyone's doing well. I see everyone's still pouring in. So Robinhood's up 2.8, nearly 2.9% on the day. They had acquired a new company out of Indonesia. They're going to be expanding into more Asian countries that way, as well as putting out their crypto 2025 sort of presentation, where they talked about launching a bunch of new products, as well as launching some new ones, even in Europe, money market funds. So that is quite interesting as well. We have a lot to go through today. So we'll be talking about the Netflix deal, some of the expectations for rate cuts here on Wednesday, as well as some of the rebalances of the SPY. We've got, like I said, hood news, a lot of digital asset treasury news. BMNR ended up updating their holdings today. So let's jump in. Let's actually see what the big movers of the day are so far. Carvana up 11.5%. They've been entered into the S&P 500, or at least that's announced. That the actual accumulation of those shares does not happen for a few weeks. And then following that will be the funds that end up matching that index. So expect a little bit more as, the coming weeks, 2-3 weeks from now, you really start to see the money pour in. Okay. Bloom Energy down 7.5%. Marvell down 9.4%. NVNI Group down 11%. CoreWeave down 6%. Airtest Systems down 6%. Sea Limited, Lululemon, which has earnings on Thursday. Netflix, Lemonade, all down a ton. Netflix down 4%. We have to talk about this Netflix deal. I don't know, guys. I don't know if it gets through this deal. They might have to, pay out a lot of money just for even putting up this deal. If, example, Paramount ends up getting the bid. I know that they said that they ended up picking Netflix, but now the bidding war is heating up as the offers are getting larger and larger. We'll talk about that. Actually, in fact, we can go right into that if we want. I have a what do you call it? A video clip from David Ellison, who is talking about this actual deal and why they're offering it. I listened to the entire 21-minute interview with him. It was a lot of the same things being said over and over and over. So I'm not going to subject you to that sort of headache. However, we will listen to a sort of 2 to 3 minute clip of him explaining what the heck's going on. Just for the quick facts, however, instead of offering what Netflix did, which was sort of cash and equity, Paramount is now launching an all-cash deal, sort of placing them at $30 a share, which is about $108.4 billion, about $18 billion more than what was offered by Netflix. The equity is going to be backstopped by the Ellison family and Redbird Capital, in addition to debt fully committed by Bank of America, Citi, and Apollo. So, very interesting. But let's go ahead and hear from David Ellison on this news. Switch over here. Okay, let me know if you guys have audio.
That enormous deal that was announced on Friday, in which Warner Brothers agreed to sell itself to Netflix. Obviously, a lot of reporting throughout from me on Paramount and their frustration with, in fact, the process itself. And we can now, of according to the wires and a press release, tell you that Paramount is now launching a tender offer to acquire Warner Brothers Discovery, $30 a share, all cash. Now, what this will have the effect of doing essentially is making the shareholder vote on the Netflix transaction the key, where shareholders will be making their voices heard conceivably. We don't even have a date for that shareholder vote. Typically, it can be 3 to 4 months after the announcement. Obviously, we've got to wait for the merger proxy and get the background, at least the background according to Warner Brothers. But what we do have now is the background essentially according to Paramount, and the fact that throughout in this press release, they feel as though they were not given the attention they deserved and were not treated on equal footing to Netflix. And hence, in bringing a tender offer of this type to shareholders, they are going to share everything with those shareholders of Warner Brothers in the hopes, of course, that they will put pressure on the company in some way, and or at least indicate that they're unwilling to vote in favor of the current transaction with Netflix. I should point out as well that as these things go, when you file a tender offer, you are then put the company you filed against in the position of having to file a D9. Just looking for some of my notes here.
I wanted to see the actual interview. This doesn't seem to be it. I've already this was way before. Let's actually go and look at the interview. Sorry about that. That was what's expected from the deal, but I want a little bit more. Okay. This should be the actual interview.
Netflix stocks is worth, it's within the collar. It's worth at least $3.50 a share to the deal. I mean, saying our cash versus theirs doesn't seem a fair comparison, David.
So Father, respectfully, I disagree. I mean, look, those shareholders can basically go buy Netflix Netflix stock in the open market if they want to, and they're going to be sitting there with a linear stub that's valued at $1 a share, which is a business that's in secular decline. That without the synergies that's basically created by our deal, they will ultimately be holding something that is not worth anything. By every metric you can look at, we believe that our offer is superior to shareholders.
Right. And again, we're going to get a lot of debate around the value of that stub, because even though it's an incremental, let's call it difference of $2, it can go to the value judgment. Let me ask you about Paramount, though. If in fact you are successful here, you're taking on a lot of debt, right? I mean, and you're diluting your own shareholders significantly through an inclusion of what, $41 billion in equity. Isn't that correct?
Yeah, but look, we're the largest shareholder of basically the Paramount Class B common stock.
We being
the Ellison family. We will also be the largest investor in this deal. We're literally sitting here today because we are fighting for our shareholders, and we're also fighting for the shareholders of Warner Brothers Discovery. And from that standpoint, this deal is accretive to our shareholders. You know, when you look at what the combined business would be with the synergies that you put through it, round numbers, $70 billion in top line revenue. We get to $16 billion in EBITDA very quickly, and it generates $10 billion in cash flow. What we're creating by putting these two companies together is a real competitor to Netflix, a real competitor to Amazon, a real competitor to Disney, not something that is so anti-competitive. There will be no more competition in Hollywood if this deal is allowed to come to pass.
Is it an existential issue for you, though, if you don't succeed here, David?
Look, as we've said on our earnings call, we believe in our standalone business. We have a great plan. But very simply, we made the highest offer for the company. $30 in cash is more than 23.
Right. But when it comes to Paramount itself, if you aren't successful here, you have confidence that you still have the scale? I mean, we've had this conversation before. No. I would assume that you're going to try and figure something else out, because there is a sense that you don't have the scale to compete in this world.
As we've said, we can absolutely, this is a buy versus build. We absolutely have a path to be able to build. But again, when we actually sit here today, having put forth the most value for shareholders for Warner Brothers Discovery, we believe that they need to be able to evaluate that offer, and that's why we're taking it directly to the shareholders.
I asked you about the president, but I'd love to come back to that. I mean, do you sense that he is in your corner here?
What I would say is I'm incredibly grateful for the relationship that I have with the president, and I also believe he believes in competition. And when you fundamentally look at the marketplace, allowing the #1 streaming service to combine with the #3 streaming service is anti-competitive. And this whole notion of category ambiguity, forgive me, David, you've been doing this a long time.
Yes, I have.
Like, I don't buy it.
You don't buy it. In other words, their argument, John Malone made this argument with me. It's not about streamers. It's about TikTok and Instagram and YouTube.
I'm sorry. Let's follow that analogy for a second, right? Okay. That's like saying Coke can buy Pepsi, that they're both beverages because Budweiser is a substitute for Coke. That's not a realistic argument. Now let's actually look at it from the talent community. The greatest showrunners in the world, David Benioff is not going to take the next Game of Thrones to basically TikTok or to Instagram. They're going to take it to Netflix. They're going to take it to Amazon. They're going to take it to Apple. They're going to take it to HBO Max. They're going to take it to Paramount Plus. That's not actually how the ecosystem works. If this deal is allowed to come to pass, it is anti-competitive, and it is a horrible deal for Hollywood. And as someone who spent the last 15 years of my life producing movies and television shows, this is an industry that I love. This is an existential moment for our business, and we believe that what we are offering is better for Hollywood, it's better for the customers, and it's pro-competitive.
I mean, personally, I don't really care, and maybe this is insensitive or something, but I don't care about Hollywood. I care about, my own viewing experience, and maybe that does get worse over time if Netflix has such a massive advantage. Like, maybe they don't have to offer, great new movies or TV shows into the future, but for me right now, I don't think people want to have multiple streaming services and pay, a ton of money per month to sort of get multiple streaming services. Like, I would just want to own Netflix. And right now that's the only subscription that I am paying for, that and YouTube Premium. So I actually would prefer that, Netflix actually have this deal. That way I get more content for the money that I'm currently paying. Maybe that changes. Maybe they end up sort of charging it in two different ways where they say, hey, pay for your Netflix subscription. And if you want access to all of this IP, then you need to pay sort of a bonus amount, like a Netflix subscription premium. There's a possibility of that as well, but we'll see. I have no streaming services, and that's probably a great way to do it as well. I still think the best bang for your buck is YouTube Premium. Like, you're getting a music service, you're getting no ads. You can download things. So if you're on like a flight or whatever, you have all the YouTube videos you could possibly want. I really like YouTube. Okay. That being said, let's look at some of the things that are happening actually in the markets. We did end up seeing Carvana entered into the S&P 500. We covered that last week. However, this is the full list. Actually, it looked a little bit better before I brought that up. This is the full list of everything that's being added and subtracted. Okay. So Comfort Systems, I know a lot of people were laughing about this business as well. Carvana being entered. You have Pinterest being added into the mid-cap 400. That sort of went past really quietly. Booz Allen Hamilton also being added to the S&P mid-cap 400. So there's a couple of interesting names that are being added. Under Armour actually being deleted from the mid-cap 400 and doesn't look like it was put into the small cap. Little interesting. Okay, Marriott Vacations Worldwide also got deleted from the mid caps and does not look like to be added into the small caps either. So no downgrade, just a simple taken off the list. SoFi is tanking. Is that what you're saying? Every time I hear that something's tanking, I go and look and it's down like not as much as I think tanking deserves. But let's take a look. I'm 2.2%. Hey. If people want to sell this off on dilution news, go right ahead. In my opinion, I prefer the company after the dilution. And, it's quite a discount to get this versus where you were paying it before the dilution. Chance of a rate cut on Kalshi right now. Whenever you take a look at this, so we've already had 2 rate cuts. So the way to read this is exactly 2 rate cuts means that they're going to hold on December 10th, and 3 rate cuts means that they are going to cut an additional time on the December 10th meeting. Anything above that, like 4 cuts, for example, would either specify that they are going to do 50 cuts or that they are going to have some sort of special meeting in order to cut an additional 25 basis points, but that's less than 1%. So extremely low chance of that happening, but 93% chance of 25 basis point cuts or 3 cuts for the full year. Okay. Which, whether or not that's going to be traded as sort of a buy the rumor, sell the news type event, or, maybe SoFi doesn't actually run on that news, the fundamentals will change. That will allow a lot of companies in the United States to potentially, try to hire more, take on more debt, try to grow a little bit faster, puts a little fire on an already very burning system. Burning meaning good, though. Like the fires of growth, what I'm sort of meaning here. That being said, in 2025, the layoff announcements have exceeded 1 million jobs for the first time since 2020. This screams rate cut to me. Screams it. Okay, so I definitely think that we're seeing a 25 basis point cut and even more into 2026 if there are AI growth fears or something like this. There might be inflation concerns, but I think the real concern is unemployment, which is also ticking up, by the way. We also get JOLTS tomorrow, if I'm not mistaken, and then the Fed rate cut decision on Wednesday. So we'll get a lot of macro news there as well. And actually, I wanted to stick on the Netflix deal really quickly because Joseph Carlson, which actually he just made a video on this, and he's been a long time bull of Netflix and continues to be very bullish. He made a video talking about how this deal is going to go through and how he's very bullish on this, and they wouldn't offer a sort of 5.8 billion or whatever the exact number is of a sort of a breakup fee from Netflix's side if they didn't believe that the chances were very high of this going through. However, he said, I was more confident that Netflix could buy Warner Brothers before it surfaced that Jared Kushner was an investor in the Paramount deal. I don't know how to read that any other way than it's bearish for Netflix's chances. Yikes. I'm not an investor in Netflix. I'm sure the long-term Netflix shareholders, this doesn't really change too much. Obviously, they would like for the Warner Brothers deal to go through, especially now that there's a breakup fee. But it probably doesn't change, Joseph Carlson's actual holdings. I'm sure he stays invested in this company for like another decade as they continue to just go more global, expand the price in which they're charging, maybe advance in their ad tiers and continue on with their success, because that still will happen. Okay. This is new. Google is saying that telling advertisers that it'll bring ads to Gemini in 2026. There was actually a report for OpenAI earlier, I think it was late Friday, where their chief product officer, if I'm not mistaken, came out and said that the ideas that they were even working on ad-supported tiers and these sort of things was just not real, and that they have not been really pushing that into live product. So we'll see. Giving a little update to the code red that they said to sort of stop doing that and start working on the actual product advancements. He also said that the reason why people have been sort of shifting away from ChatGPT is because they've been worried about how safe these products actually are. Things like, not wanting to give false information or not wanting to, put someone's picture in a certain image to not sort of falsify that image in this sort of way is just sort of not allowing the models to do what the users want it to do. If it's not being useful anymore, not giving you data, not making the images that you want, not doing these sort of things, people are just going to go to Grok or Gemini where they will do that research. They will make those images. So maybe that's putting a little bit of competitive constraint as they're worried about negative press of something wrong happening. That being said, let's talk about BMNR. BMNR, which, if we take a look at the stock, is up 2.4% right now, $34.85. They put out this morning an update on their crypto holdings. Okay. They now hold 3.2% of total ETH supply and also raised their cash. So this is what we talked about the other day, right? I said, they're going to be buying a lot more Ethereum this time, which they did. They got up to 140,000 roughly of new ETH tokens, which is a big acceleration from where they were the last probably 5 or so weeks. So that was quite exciting. Also, a very small thing that no one really noted on. They also added one additional Bitcoin. I don't know if this is from their mining services or, some other small advertisement, but every other week's at 192 Bitcoin. They're now at 193. Weird. 8co holdings stayed the same, but total cashes went from, being as low as 104 million. And every single week since that 104 million, we've climbed up over and over and over and over. And last week, or the last 2 weeks, I'll say, had gone from 800 million to 882 million to now $1 billion. The next BMNR update that I'm going to give, like a standalone video, because I need to do a little bit of looking into this, is finding out how much they've been actually raising. Because whenever you add on 138,000 Ethereum, which is how much? I don't know if they break this out, but I can just do the math really quick. 138,452, and we are at a price at what? 3,100. 3,100. So they spent $429.2 million on ETH this week. Okay. And then they also added 118 million dollars of cash. They've added $547 million to the business, with nothing in their business that actually makes cash, okay? Which means they had to go out and dilute to add $547.2 million to their business. I mean, that is spectacular. That's truly spectacular. So this is another problem with BMNR. Let me bring up BMNR really quick. We don't get an update on their outstanding shares, so we have to do it ourselves, okay? We go ahead and take a look at total shares here, 384 million. This has not been updated in weeks, okay? After weeks like this where they add on potentially $500+ million of dilution, this changes the market cap. The market cap here is a simple, calculation. What's the outstanding shares? What's the price of the stock? That gets us the market share. Okay. But, or market cap. But we don't know what the market cap is because we don't know the outstanding shares. So I need to do the math going back every single week to see how much the change in cash accounts for the price that they're adding to Bitcoin or Ethereum and what that's done to the actual outstanding share count. Because I think that we're paying a lot more for this business than what people think. It's probably north of a $15 billion market cap. All right. Let's see. I'm seeing a nice... Oh, okay. We were just talking about the Bitmine immersion dilution that's going on, which is, it is their business. I'm not even saying that this is like bad practice or anything. If they continue to get that dilution at, really good premiums, and it means that they can continue to add on to their Ethereum at cheaper prices, that's great news. The problem is Tom Lees has said that we have bottomed. Okay. Ethereum had bottomed. And so now is a good time to essentially buy. He doesn't believe in this sort of 4-year cycle. Well, I think that he might not be telling the full truth because you see that change in cash, right? If we had bottomed, in this sort of range, why did you hold on to so much cash during this moment? If you think we have bottomed, why do you still have $1 billion? Why has your cash position just continuously climbed? You have one goal with that cash, and that's to buy Ethereum. Unless it's not, unless they are looking to make an acquisition, get into some different sort of crypto practice or something. I don't know. But if you're diluting your Ethereum to have cash, that's the opposite of what shareholders had intended you to do. The hope is that he dilutes to buy Ethereum. and they are, but just not as much as what they've previously done. I'll show you this in a slide here because it might make sense if we see a visual. Okay, here. This is get it away from chat here for a sec, and I'll actually just move chat as well. This is BMNR's cash over time. Okay, what we end up seeing is their cash has gone up and up and up. What date was this? And what date was the bottoming? So the bottoming of Ethereum happened on November 21st, which was right around here. Yeah, right around here. Okay. You had $800 million to buy that dip. Yet you're increasing your cash position and not going in on Ethereum. They are buying Ethereum, but what's up with the cash, bro? That I don't understand. You know, you have a pretty here, if we take a look at this little cheat sheet here, make it really big. So assuming ETH is, well, it's at like 106. Google Finance does not have crypto on it, so I have to manually update ETH's price. And the share count is not correct either because I have not updated it from this week. So there'll be an additional amount. But right now, from last week, I assume that they had 409 million shares. After this week, it's, you know, they just added an additional 500 million. If that happened at a price of $35, that could add a lot of outstanding shares. So how much ETH do they have? That also needs to change here. Okay, so assuming that they have $12 billion in market net asset value of Ethereum, that puts them at an MNAV of 1.19 times. If that includes their cash position, which is now at $1 billion, I know my charts are not good right now because I just need to get the raw numbers. But Bitcoin, moonshots, cash, everything, they're still at a decent multiple. One of the very few digital asset treasuries that are not, okay? Or that are still at a premium. But what was I trying to highlight here? Sorry. If they hold at a multiple, this is of a multiple of their Ethereum. People are hoping that they hold Ethereum. If they're starting to stack on cash, that's not going to be that great. I want them to hold, which they also hold a little bit of Bitcoin. I want them to hold Ethereum. That's the goal. If you're stacking cash, you're trying to buy the dip, I'm perfectly okay with that. But then don't tell us that the dip as, like he's trying to control them. If he says that there's more dip to go, well, then everyone's going to sell their Ethereum, and then it like he is going to be the guy that actually makes it drop. That can't happen either. So he's playing sort of both sides. He wants to buy a dip, but he also doesn't want to cause panic. I think that's very interesting. Okay. Tanner, the world isn't all about what you want. What does that even mean? I'm talking about as a shareholder, as an owner of BMNR's business. I have a vote. I'm giving you my opinion. You come here to watch my opinion. I'm just telling you what I think. Doesn't mean that the stock has to adjust. I'm not like thinking Tom Lee's watching or something. But yeah, Upstart up 1.3%, 47.35. Quite the adjustment from, being under 40 not long ago, which would have been the time to buy this interesting name. What are they up from then? 33% they're up from there. That's crazy. And Chime, where's Chime? I have not seen them. Down to, sorry, 1.6% on the day, 23.71. I've been doing some more research into this name, seeing if I want to like go much heavier into it. The only problem is I want to see 2026 guidance before I make that call. Q4 growth is not looking very exciting. You know, they're expecting to grow revenue by like 20 to 23% or something, but that's after a quarter of growing at like 29%. And the only real cyclicality of their business is in Q1 because of the tax refunds, which is expected to be really high this year. Okay. For those types of really high businesses, you can look at things like restaurant spend or retail spend. Stuff like this might end up doing really well, but especially for Chime on the lower end of the spectrum in terms of the clients that they end up having on income, that can really, really benefit their business. You see it in their earnings, might be a name to look at. Okay, let's see what else. If not, there was a quite a long video with Kevin Hassett. I wanted to hear what this was about, considering the chances of him being the next Fed chair is quite high. I mean, Trump literally said that he was standing in the room with them and that he said, "Thanks, Kevin." We'll see.
And the White House National Economic Council director is calling for a 25 basis point cut. Joining us now, the aforementioned White House National Economic Council director, Kevin Hassett, who's, I don't know, it's growing. He's growing in size. Like, and I think I need to call you Mr. Director now, just the anticipation of maybe even greater things for you in the future.
You got.
You're at 78% now on some of the things. So we're going to have a wide-ranging talk, Kevin, because it all. Oh, I just said I was going to call you Mr. Director, and then I called you Kevin. But you think about 3% inflation, affordability. Should the Fed be cutting? I think Myron would like even more than 25 basis points. But we might have dissension on both sides. What do you think the Fed should be doing right now? Doing more than 25, or should it be a dovish cut instead of what people are predicting? People are predicting a hawkish cut where they jawbone that maybe this is it.
Well, it looks to me like Chairman Powell has done a good job of herding the cats at the committee. That if you look at the comments that different committee members were making just a few weeks ago, that it looked like they're very evenly split about whether they should cut or not. And I think that Chairman Powell agrees with me on this one, that we should probably continue to get the rate down some, do so prudently with an eye on the data. And so I think that it's an example of, you're managing a committee. The committee was really in diverse opinions before, and it looks like Chairman Powell has done a good job of getting people to circle around the futures markets the right answer.
Well, how restrictive do you think the Fed is right now in terms of away from where it should be? How much would you, let's say you were in the job, what would you be looking forward to in addition to this cut, and then next year? How many more?
I hate to disappoint with the sort of counting of cuts, but I can say that what you need to do is watch the data. We've got a lot of missing data because of the government shutdowns. We're going to get really back-to-back jobs numbers pretty soon. And so, I think that the Fed chair's job is to watch the data and to adjust and to explain, why they're doing what they're doing. And so to say I'm going to do this over the next 6 months would be irresponsible, really. And I know you don't want me to be irresponsible. I mean, you do sometimes, but not right now.
I do, and I'm not expecting to get a lot of answers about whether you are the president's pick or not. But when the president the betting markets went up to 80% after that meeting where you were standing there, I was watching, and you were standing, you were standing there, and he said, "Yeah, we've got one in the room, a potential Fed." And I've done your face, because I was kind of like, and I was just wondering, what were you thinking at the time? Wow, I got it, or wow, I'm embarrassed, or wow, I wish you wouldn't do this, or I'll just whatever the president wants to do, I'm okay with. What were you thinking when he said that?
First, I support the president 100%, and he's very, very good at playing the drama of things. The thing I got to say, though, is people are talking about it. I think the markets kind of have it wrong about how the president has a tough choice. You know, if you look at it, Chris Waller is one of the best monetary theorists of the last generation. He's got papers in places like the Journal of Economic Theory that were really the path-breaking papers that showed us how to model monetary policy. Mickey Bowman's the best regulator on earth. I talk to her all the time when I'm trying to think about what about this, what about that, what happened to SVB. And Kevin Warsh is about the most experienced Fed person that there is. He was there during the financial crisis before. So the point is that the president doesn't have a tough choice. He's got a guaranteed good choice. And if I happen to be that choice, I'll be pleased to help him serve.
I want to get into the affordability thing eventually, but I want to get into it this way. We've had a couple of people defend you recently. Brad Gerstner, we just had Jeremy Siegel say you're not going to be a rubber stamp in terms of easy monetary policy, that you're an established economist that would make the right decisions, I guess, to raise. But it does, at 3% inflation, it is on everyone's mind right now because that's above target. It's much higher than what the Fed would like. And I want to talk about affordability because suddenly it's a buzzword. Look, 23% of these price increases happened under the Biden administration. Sure. Now, the president's been in for not even a year, but inflation is still too hot, and it's above where it was when he came in. So you would need to think about, as a Fed chief, whether cutting is the right move right now. And there's an article in the Journal today, advisors are urging the president to start acknowledging that people are hurting or that there's an affordability problem. And he's been saying it's kind of like a Democratic talking point that doesn't exist. How should you be handling this? Because the mainstream media is going to play it up. Sure. The buck stops with who's in the White House. And even if it was Biden's problem, the president's getting blamed.
Right. Well, the way that in the end, with an eye on the horizon, that this problem gets fixed is that real wage growth goes up enough so that huge 23% hole that was dug by Joe Biden is a thing of the past because people have money in their pockets, enough money in their pockets to bring their real standard of living back up. The real standard of living in the U.S., the purchasing power of ordinary Americans has gone up by about $1,200 so far this year. If you look at the great data on Friday that said that real wages were up 2.5% over the last few months, that happens when you get positive supply in the economy, and that's what drives growth up and prices down. And so what you want to do is lock that kind of gain in where you're seeing real wages coming from positive supply shocks. And if you do that, then just as in the 90s when we had positive supply shocks from the computer, and Alan Greenspan was willing to sort of let the economy run a little bit hotter, we have an opportunity with AI and all the productivity that we're seeing to do so again, but to do so with a great deal of caution as you watch the inflation numbers go by. Because the one thing we know is that inflation hurts everybody in the economy. And you saw that in the last election. I'm sure the last election was very much an inflation election.
Kevin, nobody likes inflation. And I think part of this administration's plan to try and get affordability, really within more affordability, I should say, out there, is to lower mortgage rates, right? Have car loans come down. Part of that is the Fed lowering those interest rates. We have seen the 10-year Treasury jump up. It's not a spike, but 4.14 versus 4. On the expectation even that when the Fed is going to cut rates again, we think, to see the 10-year move higher, just as it did when the Fed originally cut 100 basis points, it does raise questions about how much control the Fed has over the longer end of the bond market, what that means for things like mortgage rates that are set off of the 10-year. We had Ed Yardeni on this morning, and he said he thinks it may be that the bond market is concerned that inflation is not under control at this point. What do you think?
Well, I think the bond market is still much improved from the beginning of the year. It's fluctuating around a little bit now. I think in part that could be related to the uncertainty over what the Fed was going to do and signal in this meeting. The bottom line is that if we get inflation down with positive growth like happened in the 90s because of the positive supply shocks, then there's plenty of room for the 10-year to go down. But that's going to require discipline and, keeping a close eye on things. But absolutely, when you see real wage growth over the last 3 months of about 2.5%, that's a sign of we're in the midst of a positive supply shock. And that's really good news, both for equity markets and for bond markets.
I just wondered, is this article accurate? Has some advisors been saying to the president, you got to recalibrate your response to before? And I can remember during the Biden administration, when the Biden administration would blame the feeling that the economy wasn't going well on the media. I used to say that's just patently absurd. But that's kind of what we're hearing now, that, there's, almost, ignore the public's feelings about how, they feel about the economy at your own peril. And I'm just wondering, did that ring true to the president, that maybe he needs to he's in the White House. He may not have caused it, but the buck stops with whoever's in the White House right now in terms of how people are feeling.
There's a huge amount of positive news that the president is going to be breaking this week about the economy. We've got a person who actually approached the studio with me, walked with me, who's tracking the openings, the groundbreakings for the new factories that are, in the trillions of dollars of announcements that the president's been making. And we're up to almost 30 of those that actually the groundbreakings have happened. And so there's a lot of positive news that's positive for people's jobs, for people's incomes, and for inflation. And President Trump is just going to go out there and remind people of that. But in the end, again, going back to the eye on the horizon, that President Trump's economic policies were profoundly popular just before COVID in his first term, because he had $6,500 of income growth after the big tax cuts. And so right now we're going into next year where the typical person who's got no tax on tips, no tax on overtime is probably going to see an extra $1,600 to $2,000. A lot of that'll come as tax refunds in the beginning of the year. That kind of stuff is going to make it so that people are going to look at their wallets and say, oh, boy, this guy's really making me better off. And in the end, that's more important than any poll. The final thing I got to say is that we did look at a lot of those sentiment, the softer indicators over the last few weeks, and we found a pattern that I'm sure you guys could find a chart that would show, which is that consumer sentiment it tends to crater when there's a government shutdown. And so we have sort of back-to-back 4% quarters coming in, and then we got the government shutdown and all the chaos related to that. And the sentiment indicators went down, but the hard indicators really didn't. And that's a pattern that we've seen over and over again.
Kevin, the Democrats would say the shutdown was entirely about these subsidies, even though, that's what they picked to shut down the government over, obviously. But you can't talk about inflation if you don't talk about healthcare and rising costs that are across the board in healthcare. What do you think? Well, not just Republicans. I don't know if it could ever be bipartisan, but what should the government be doing about these subsidies right now? Should there be, in good faith, bipartisan talks about extending these subsidies, or not without guardrails? How do you think that's going to go? Because it all comes into the affordability discussion.
Well, the president and Republicans, brought forward two big policies in the big, beautiful bill. One, about $50 billion to rural hospitals, and then about $30 billion for cost sharing to help the people who might be affected by these increases that were really a Democratic policy because of the expiration of the extra COVID subsidies. And so the cost sharing stuff was thrown out by the parliamentarian, but it shows that there's room for negotiation about something that could be good for people. I mean, we obviously want lower healthcare costs, but also we got to get the fundamentals down. And don't forget that for 2 years in a row under President Trump, we were able to get the consumer price index for drug prices to go negative for the first time since World War II, because all of the hard work we did working with drug companies to make drugs cheaper for Americans. And you've seen how much hard work we're doing again on that. And I would expect that we're going to see another third year of a negative CPI because of that. And so we got to get the fundamentals right. And, I'm going to see Senator Thune in the White House today. I'm sure there'll be some discussion about how we go forward with the healthcare debate up there on the Hill between now and Christmas.
Some other things are on President Trump's mind this morning. Kevin, just posting on Truth Social, there must be only one rule book if we're going to continue to lead in AI. We're beating all countries at this point in the race, but that won't last long if we're going to have 50 states, many of them bad actors, involved in rules and the approval process. There can be no doubt about this. AI will be destroyed in its infancy. I will be doing a one rule executive order this week. And you can't expect a company to get 50 approvals every time they want to do something. That will never work. Any comments on that,
Yeah,
Mr. Director?
I've seen a draft of what the president's talking about. It's been a top priority for him to make sure that we win the AI race. And I think that the order that he's promising to sign this week, I guess he's reviewed something close to a final over the weekend, is something that's going to really help the AI companies understand what the rules of the game are. As you know, that there are some states that want to regulate these companies within an inch of their lives, and then when they make a misstep, fine the heck out of them, just so that the states that are going bankrupt because of their profligate governments can take some money from the AI companies and so on. And so that's a game that President Trump isn't going to allow people to play. And this executive order that he's promised to come out is going to make it clear that there's one set of rules for American companies in the U.S.
Hey, Kevin, one other question we've been batting around the table this morning was the president said just yesterday that he was going to be part of making the decision about this Netflix transaction with Warner Brothers. And at least the comment that we were making in the past is that the president, this president and presidents prior, I believe have never at least publicly declared their involvement in these decisions. They've historically been left to the antitrust department with inside of the Department of Justice. So how different is this, and how should we think about that?
Well, I don't think it's just rare for presidents to have opinions about big society-changing mergers. But in the end, the Justice Department is going to study things like the Herfindahl Index, the concentration in this industry, the amount of competition that is reduced because of this big merger, and what the responses of all the other companies that are playing in this space might be. That's going to be something that goes on for quite a while. And I think the president is just very interested in making sure that there's a lot of analysis to make sure that we make the right choice.
You think that there's more to it now, though, the relationship that a company can have with the president than in past administrations? Is it? I think that's what Andrew's alluded to. Is it different than it's been in the past? Do you think the influence that President Trump?
I think I haven't been inside any other administration than the Trump administration, but I could say something about the Trump administration is that it's about the most transparent administration I've seen in my lifetime.
That's what we agree with,
Kevin.
And so what the other guys were doing probably, is they weren't telling you. And so it's harder to sell. But Mr. Trump lets you know how he feels. And that really, really makes him a wonderful person to work for. I can remember when I came in to work for him the first day in 2017, he sort of patted me on the back and said, "Don't worry, a lot of people are going to be grumbling at you because you're coming out to the White House, and I got your back." And he's had my back the whole time, and I really respect him for that.
Kevin, yeah. I think it's sometimes so transparent. People are like, "Oh." Well, I can't believe what there's. No, I'm just kidding. Thanks for all your time today, Mr. Director. I don't know what we're going to.
Okay. Yeah, obviously there were some good parts in there. Chat's getting a little political, a little too political for me right now. But yeah, I really do think that he's going to be the next Fed chair. I really do believe it. He can say what he wants to say, but I think that's what's going to happen. I think the rates of him getting in is also really small comparatively. I think it's like, well, what did they put up on call sheet? Like 73%. Yeah, I would put it a lot higher than that, but that's just me. They also did talk about the Ed Yardeni predictions here. He actually had some interesting takes this morning on big tech that I wanted to play for you guys. I listened to this right in the morning. I don't necessarily agree. There's some things I do agree with, but we'll have a listen. Or actually, before we do that, let's just make sure that the market isn't catching on fire or something along these lines. I'll just double check. So S&P 500 index is down 0.4%, and the NASDAQ's down 0.25%. But yeah, let's go ahead and have a listen.
Right now is Ed Yardeni. He's president at Yardeni Research. And we could start by talking about how the markets continue to kind of melt back up. We're near all-time highs. Sure. But I think the most interesting thing, and what has kind of shocked and surprised me this morning, is your move away from the big tech names in terms of being an overweight statement. What happened? For 15 years, you've been overweight on that sector.
Well,
what's changed?
Yeah, and it's worked. And so we've got to the point where information technology and communication services in the S&P 500 now account for 45% of the S&P 500. It's very concentrated market capitalization. And I think, if the Magnificent Seven are going to continue to succeed, then they're going to have to find sales among the S&P 493. I call them the impressive 493, in order to be used for increasing productivity. And I think that's what's...
Are those stocks overvalued, in your opinion?
Well, I think they are somewhat overvalued for sure, especially now that we're seeing that competition is coming in. And, it's turning into sort of a Game of Thrones with the Magnificent Seven. At the beginning of Game of Thrones, these things go up and down. And so the different thrones have various powers. And so I think that's what's happening with the Magnificent Seven. They used to just kind of operate in their own moats and kind of leave each other alone. But I think we're now having a competitive situation. Not only that, but I think we're going to find other startups that come and challenge some of their technologies.
I'm racking my brain. I don't remember everything that happened in Game of Thrones. I do remember the Red Wedding, though. Is that what we're setting up for with the Magnificent?
Hopefully he's not about to spoil for the people who haven't seen Game of Thrones in the Red Wedding episode. Maybe it's a little late now. I mean, but plug your ears. I've already listened to this. He definitely does spoil it. So,
everybody died. You remember?
Yeah. No, I don't think everybody's going to die. I just think I think it's a healthy development. We need to see a broadening of the market, and the impressive 493, I think, are going to benefit from all these technologies.
So instead of betting on these names and thinking that they will continue to perform as they have to this point, you're telling people to invest in what instead?
Financials, industrials, and what's new for me also is healthcare. Healthcare has been kind of left kind of behind, but actually everybody thinks that IT is the biggest contributor to economic growth. It's actually the healthcare industries, especially as the baby boomers get older and rely more on the healthcare industry. So I think healthcare is another way to do it. And then you can also go overseas because the U.S. now counts for 65% of the market cap of the global MSCI or all country world. And it's hard to imagine it's going to be much bigger. I mean, it does account for 55% of the earnings share on a global basis. But I think even this year we found that other countries have done better.
Healthcare being new for you, I mean, that's a pretty big deal, especially when you look at how people are trying to change the inflationary curve of healthcare. In Washington, there's a lot of plans underway. You're confident that no matter what happens, these companies will be more profitable than they are right now?
Well, I'm kind of betting that in line with this impressive 493, that all companies are becoming technology companies. You either make it or you use it. And I think more and more companies are using technology to increase productivity. And, we've all had the experience of going to our healthcare providers or hospitals, and we know how backwards they are with regards to productivity. So there's tremendous potential. And I think we're seeing it where there's something called Epic, which kind of now allows hospitals to share your records. So you don't have to manually send them.
Company.
Yeah.
But those ideas will make these companies the beneficiaries. It's okay to just use this technology, not make it.
Correct.
That's where you'll get. Same story with industrials and with financials?
Absolutely.
What kind of pushback have you gotten to this point for shifting in this way? Because you don't do anything lightly, Ed.
It's a little early for the pushback on the call that it's time to reduce the overweight position that I've had on the technology and communication services. Again, it's been 15 years for me. The same thing with overweighting the U.S. I've been talking about that since 2010. And it's worked out. And at some point, you have to kind of look and say, how concentrated are these markets going to be? Is, the Magnificent Seven going to take everybody else out? There's going to be no market cap left for anybody else? I kind of doubt that.
What other things would you be telling people in more short term as we've got the FOMC meeting coming up?
Well, the Fed is coming. It's we've had the federal I call them the Federal Open Mouth Committee.
I like that. I like that.
Well, they've been saying for a while here that we should expect a rate cut, and so they got to deliver it. So we're going to get a rate cut. The only question is it going to be a dovish or a hawkish rate cut? In other words, what will be the language around it? And I think it's going to be somewhat hawkish. Certainly Powell's going to say that they've already cut by 150 basis points. Now they've cut by 175 basis points over the past year. But I think what's important to realize here is the bond market isn't exactly going along with the program.
Yeah, I was going to say the yields have actually gone up.
Yeah.
You're looking at the 10-year at 4.15.
I was against the Fed lowering interest rates last year, and they didn't listen to me. They went ahead and did 100 basis points. And what did the bond yield do? It went up 100 basis points.
Why do you think that? Is that because you think the cuts have already been baked in, and you're now going to start looking at more hawkish commentary that comes around this, or is this something else, something more sinister?
Well, I think the bond market is not fully convinced that it's mission accomplished for the Fed.
In terms of inflation.
In terms of inflation. And then, of course, the bond market is a global entity, and global investors do look at yields in various parts of the world. And right now, we've got what looks like a pretty significant debt crisis developing in Japan, where their bond yields going up dramatically. Same thing in the United Kingdom. I think basically the bond market is just trying to remind the government that, hey, you aren't doing anything about the deficit.
This is a really interesting moment, though, when you look at those yields climbing ahead of the FOMC potentially cutting rates, or at least the expectation that they'll cut rates. How does the Trump administration react to that? Because President Trump has said one thing he wants is the Fed to lower rates so that people can get lower mortgage rates and get lower, cheaper car loans on all of those things. And that's not going to happen if the market defies.
It's not playing out because, the Fed and the administration is focusing on the Fed funds rate.
Yeah.
And they've even got this cockamamie idea that there's some sort of neutral Fed funds rate, and it's probably around 3%. And so we're still kind of restrictive. And so they've been lowering rates, and that's been offset by the increase in the bond yield. I think you have to look at the entire yield curve, and the yield curve is saying, we still haven't gotten to 2% inflation. And, oh, by the way, the deficit is humongous, and it's only going to get even bigger as we look.
10 years been very well behaved with all the negative things that you're saying, with the 38 trillion and with inflation still 50% above where it should be. 415 is not. That's not a spike.
No, it's not. It's not. But I think
it's not going the way they want.
It's 15 points away from 3.
But you think back to what.
That's a good point. I mean,
you think back to what James Carville said.
I just don't think you're seeing.
He wanted to come back and
don't forget
the bond market so he could intimidate everyone.
Right. Well, the excrement has not hit the air conditioner.
Early on, the administration was saying that they were focusing on the bond market.
Yeah.
And it's not working for them.
Another new.
Yeah. Going back to his earlier points, I don't know if I agree with a impressive 493. I mean, it's definitely possible if people believe that, the big tech names are starting to focus in similar areas, and then that margin that they have to sort of fight amongst. Essentially, if OpenAI is charging for their models, and then Gemini is going to come out and offer it for free, and Meta is going to come out and offer these extremely large models for free because they already have existing businesses and they can compete on price, that the real winners are the other 493 companies. The ones that are using, you guys are calling for NVIDIA here. Wait one sec. NVIDIA pump. Why is NVIDIA pumping? Now up 1.9%. It's not a crazy pump, and in fact, it's already coming back down. U.S. To allow NVIDIA's H200 chip exports to China. That's the official report. But honestly, this is not something that I think you're already going to see it come back down, because it's not about what the U.S. is going to allow. It's about what China is going to allow. Still is exciting. Obviously, they're a much more powerful chip than the H20s, which is sort of the export allowed chip, which then got not allowed anyway by the Trump administration, to then only come back and allow the H200s, He's not going to apologize for that, but clearly it was a massive mistake as China realizes that there is incredible growing third-party risk by allowing the United States to potentially give the hand of chips or take it away. And then that's sort of not a good place that they want to be in. So I don't even think that they'll allow this chip to enter the markets as well, even though, you know, the massive tech companies of China will be dying to get their hands on these H200s. We will see. But until I hear a word from any actual purchases from China and that we start to see that happening, like there's a line item again from NVIDIA that we see Chinese sales, I just can't believe it until that happens. But that's the pump right now. U.S. to allow NVIDIA H200 chip exports to China, which was already talked about a few weeks ago. That's why we're not seeing, you know, the massive percent chance or percent change here. Okay. China will buy the H200 chips, but to develop their own chips. This idea I do not agree with. The whole idea that, oh, the big concern is that they could take these chips and then reverse engineer them. You don't think that the Chinese government has legitimately Blackwell, like B200s or even GB300? Like, they would pay a freaking $1 billion to get one of them at least. That way that they could, you know, reverse engineer it. So I don't think it's that obvious that, like, oh, they're going to buy it and then they just need to sort of break down and study it and then, you know, rebuild it. I think that these are a much more complicated product and something that, like, legitimately, it's not even just about the product. You need the products to make these products are extremely advanced, and really only one company builds some of these products. So I don't think it's just about buying them to reverse engineer them. Okay. Let's see. Sorry, I missed some of these. So are you worried about the money fluctuation when investing from Canadian dollars? No, all my money is in American dollars. Even like whenever I get paid from Google or you know, any of the core sales or anything like that, it's all in US dollars. It goes into a US dollar account. I rarely hold on to Canadian dollars unless I'm paying for my, you know, mortgage or any of my additional bills. So no, I don't really have Canadian dollars. What's your realistic growth expectations for SoFi over the next 2 years? Can they achieve 45% in 2026 and 40% in 2027? Thanks. I mean, it's possible, but that's a lot. That is a lot. I think it's too early to tell what their next 2 years are going to be. It's going to really heavily depend on rate fluctuations in the macro. And that's sort of the crappy part about SoFi versus some of these big names like a Meta or an Amazon. They're less tied to the macro and what their rates are doing, where, you know, SoFi, if we end up seeing job cuts or a raising of rates or something along these lines, it all affects their growth. Can't China create anything on their own? I mean, there's definitely a possibility that they create chips that are more powerful than NVIDIA's. I do think that that's a possibility. I'm not trying to state that that's not, but they're not going to get there by just buying a single chip from China, or sorry, from NVIDIA, and then going, okay, we're going to reverse engineer this. You know, they need their own breakthroughs in order to compete with NVIDIA and do that on their own. Robinhood just let me know about NVIDIA. Yeah, that's Cortex for you. They want to give you digests on the reason why companies are moving. That's exactly what we want. Oh, brother, look at their car industry. Yeah, but you know, making a car is a lot easier than making these extreme, like, do you guys know how big a nanometer is? Then do you know how small it is to make a 3 nanometer switcher? Like, to have sort of a gate that can say whether something is a yes or a no in 3 nanometers. Like, I can't even put my, that is extremely small. And then to do it over trillions and trillions of times, it's a little different than making a car. I'm not saying that China has not been known for potentially reverse engineering things, but to say, oh, look at cars and then look at NVIDIA's most advanced chips in the world. Like, let's get real. One, like, for real, they are bending light in ways that we've never seen before. And then in others, they have large presses. You have to decide today on a buy SoFi or Chime. Well, I didn't buy Chime today, and I did buy SoFi today, which I've already sort of updated. Sold my PayPal, bought some SoFi. Yeah. Okay. The process of reverse engineering things can sometimes discover a breakthrough. Yeah, but all I'm suggesting, I'm not even suggesting that they're not going to do that. I'm just saying that they already have an H200. In all of China, do you think that they have every single advanced chip? Yes, they've already, like, people have already been caught and arrested, importing illegal chips into China from places like Singapore and what was the other one? There was another big one that where they got caught, but like they are smuggling chips into China. That's already been proven. How much though? I don't know. That we don't know. No, I've never bought an option in general. I'm not an options buyer. I don't like to put expiries on the things that I purchase. I think I've been right on names and been wrong on the timing, and even SoFi to that degree, right? I bought SoFi too early and was able to average down, but still, like, if I had an option or even a leap in that matter, like, that could have hurt me if, rate hikes were coming. I don't want to lose money. But I sell options. I let other people do the betting, and, like, statistically speaking, that is the advantage. Most options expire worthless. So I do like selling options. Just to highlight here as well, Semaphore said U.S. approval of NVIDIA's H200 chip sales to China. The move has the support of U.S. Commerce Secretary Howard Lutnick. Once again, the market is moving. If confirmed by the Trump administration, the entire AI trade will have a new catalyst. China is returning. That's if China will even allow it. Okay, we've already heard, like, I think it was ByteDance wanted NVIDIA chips, and the CCP said, no way, Jose. Go talk to Huawei. No way, Huawei. Yeah, getting one chip is not the issue. Yeah, no, exactly. So it's not about the reverse engineering. I literally think they want the power of NVIDIA chips. That's the truth. NVIDIA has by far the best chips on the market. That's why people are paying a premium. Okay, what's going on now? Did China say yes? We're so excited to buy. There's another little pump here. Commerce to open up exports to NVIDIA H200 chips to China. This is, yeah, we're not really seeing anything just yet. I think it's just different areas the market might be opening up to what this means. Remember, last time we heard from Jensen Huang, he said that China was a $50 billion total addressable market for them. Okay. He also said that they're the second largest market and that they're growing at about 50% compounded annual growth rates in terms of the amount of compute that they are trying to buy. We've also known that some of the companies that have wanted exposure to NVIDIA chips have already had it in China by going to offshore data centers that are located just outside of China, like in sort of a broader Asia. I don't want to say the exact countries because I might get it wrong, but places like Singapore, for example. And that there's data centers there that some of those larger companies are tapping, which could mean that some of the expected growth from China might already be being seen, but just in a different light. So certain geographies that are buying those chips are being used for Chinese customers. So those Chinese customers would not essentially double dip. But yeah. Malaysia, was that the one? You might be right. I think you are correct. SoFi news. What's the SoFi news? Doesn't look like much. But I'm seeing small like rumors being put out on SoFi right now about potential acquisitions or potential like getting into business banking and stuff. None of this is confirmed. So yeah, we'll see. We will see. It was Singapore and Malaysia? Okay. That does sound right. I remember Malaysia for sure for some of these data centers. I think that Alibaba was tapping. Do we want to check some of these NeoCloud names as well? Nebius just breaking over 100, a little below that right now, but we might end up breaking through 5.5 cents away. Let's also check. Why don't we go to TerraWolf up 1.5%, IREN up 1.3%, CoreWeave down 3.8%, 3.9%. What else? Okay, I was going to say, where's the down part in this chart? That looks like quite the recovery from $80 to $84. Google down 3% on no news. Let's see. I think I saw, actually, I think I do have some Google news. I think there was a report that Waymo is seeing much faster growth than people expected, not necessarily negative. What else? I thought I had Google News. Gemini now being built into YouTube and YouTube Studio for both helping creators and viewers with comments for the creator side, video ideas and understanding analytics and stuff. So they're bringing that. They also said that they're going to bring in ad-supported tiers to Gemini in 2026. They were reaching out to advertisers and letting them know that they'll have sort of a new platform for ads. That was also there. Chipotle also this morning announced a $1.8 billion share buyback authorization, which quickly got sort of read and then ignored. So that's quite interesting. I love Chipotle, but I'm with everyone else. The bowl size consistency is not acceptable. So I definitely don't go there as much as I used to. Back in the day, I used to eat there a lot, especially whenever I was trying to gain weight. It was such an easy way to pack on a ton of protein and calories for a pretty good price. Okay, let's check NVIDIA again. NVIDIA up 2.8% now. Hey, I don't mind. I'm obviously extremely bullish on this name for those that might be new to the channel. It's by far my largest position. My second largest position is about half the size, a little less than half. So about 42% of my portfolio is in this. So whenever you see this name red and my other name's green, I still might hold a sad face whenever it's green. We're making money. Now, it's still a long way from where I want it to be. I honestly think it should be somewhere around 220, 230 at this valuation. knowing the growth, the opportunities, the catalysts, just like China, which we've already known for a long time, has like been something that Trump has been trying to reverse. Yet the stock, for some reason, thinks that TPUs are the issue, but yet like we're about to get into China potentially. Like I just think the entire market is growing so much faster than people are giving it credit for. Yeah, I think I'm about 42%. I can check the exact percentage right now and just open up my portfolio. 41.1% in NVIDIA. Tanner, if the SoFi offering closes today, could that mean that we see a PR after close about what they want to do? Well, the problem is that I don't see a reason why it's going to be an acquisition. They said the reasons for it is for, corporate purposes, for optionality, to increase growth. They did say business opportunities, but I think that means that there could be a small acquisition. I don't think that means that there's going to be some large acquisition. Semiconductor is a cyclical business, cannot compound like this forever. 100%. But look at the multiple. Like people are saying, like look at Palantir's valuation, and that is something where a lot of people are maybe suggesting that it's going to compound forever. We're looking at a PE ratio on a trailing basis, not let alone a company that is growing right now, the biggest company in the world, growing at north of 60%. And they have a PE ratio of 46 times. They're on a forward PE ratio, they're the second cheapest company in the Mag 7 behind Meta. Google, more expensive. Amazon, Apple, Tesla, all of them more expensive than NVIDIA on a forward PE basis. And by the way, let's not even get into free cash flow because they're not spending anything on capital expenditures, because the capital expenditures are on chips and data center infrastructure, something that NVIDIA is the supplier of, not the buyer of. So you could see them coming out and doing a lot of deals and investing in different businesses. That also happened this morning. SoftBank and NVIDIA looking to invest in this new robotics business. What is this? Skilled? Is that how you say it? Skilled AI? Which looks to be another robotics name, which in my opinion, the combination, I don't think one or the other is going to be that big as data center investment, because each individual car fleet is going to need more data centers as that information gets sent back to sort of the large brain of full self-driving. There will be local compute, of course, so they will still need chips on board each and every vehicle, but a lot of it's still going to go back to a larger, sort of autonomous vehicle fleet data center. So the Grace Blackwells, the Vera Rubin chips, these sort of specialized chips will still be important for data center purchases, but I do think that onboard chips for robotics, full self-driving, is going to be sort of their next big S-curve. And I don't think that that's being priced into NVIDIA's price at all. People are acting like, once these data centers get built out, then that's the end of NVIDIA. Everyone can go back to selling off this name, and they're going to go back to a $500 billion valuation, something like this. Like, that's what the revenue that they're going to put up next year. Not 500 billion, but I mean, it's not going to be far off. We are not going to have to wait long to put up some $100 billion a quarters here. But yeah. Let's take a look at the markets. NVIDIA now up 2.3%. as H200 chips are potentially getting loaded onto planes right now and headed on over. It's not going to be that quick, but it still is a hopeful, exciting future for them that they find the second largest customer that they could find, which is China. Amit was sick. He didn't wear a scarf. I swear to God, I almost wore a scarf to this stream, but I thought, you know what? I'll let him have his day. He's not feeling great. I don't want to add fuel to the fire by making fun of him. But hopefully he's back for the market close. And then I think something about some 8 o'clock interview that he has that he wanted to go live with a new guest or something. That seemed exciting as well. Something's changing with Amit. You know what's changing with Amit? Amit has done this is what I honestly think. He's done extremely well and has put all of his time into YouTube. And now he's looking to potentially, I don't know, hang out with a dentist more often, do these sort of things. Like, I think that what's money if you don't have family? I think that he also wants to tackle that part in his life as well and make sure that his health is in order as well. I don't think that it's, I mean, maybe if you're just chasing wealth, then that's perfectly fine. But, you know, wealth without health is sort of a little too sacrificed. Hang out with a dentist. Yeah, a potential partner. That's what I'm referring to. I don't know if there is anyone. I don't live close enough to admit to know. But from what I've heard from some of his, like I know as much as you guys do. Like I listen to the streams. I think that he might be trying to make that sort of a resolution for next year, is go on more dates, and whether he's using Tinder or Grindr or whatever, I don't know. But no, I'm just playing. Okay. Has Amit ever came to Canada? Yeah. Yeah, he was in Toronto. We went and hung out for a bit. We met up with some other creators there, and it was a good time. I think actually Tevis ended up coming out, and yeah. He's not going to slack on his day job. He's just legitimately sick. Cool. I live near Toronto. Yeah, there you go. Tanner said Amit is grinding all day. He is grinding all day. Fantasy stock draft updates. I have not checked on those in a while. I know Amit keeps up with them. I need to check on it. I'm honestly just very salty that I didn't pick SoFi in the draft. That's why I'm upset. But yeah. Here you can see the draft. Amit's up 31%, being dragged down only by Duolingo, which is down 56%, which is just a shame. Matt's up 25.75%, which, man, if I would have taken SoFi in the third round, which I could have turned this negative 15 position, which I still am a big believer in ServiceNow, and I honestly love my portfolio. Aside from the trade desk, which I was holding at the time, I'm no longer holding. What a big... But here's the difference between the stock draft and actual investing. One is the elimination of certain companies like Robinhood, for example, which for Amit's up 78%. I'm a big believer in that name. I'm a huge believer in SoFi, up 83%. But I can't put it in my portfolio because someone else took it. The trade desk, I have long trim this name and not a believer. So, that should not continue to lose me money because I would have cut it by now. But, The idea was to bet on a name and see how that compounds. And you know what? Chris is definitely being hit with this as well, because he would have changed his portfolio around over time completely. He's like all in on Meta right now. But up 5.8% for Chris. Matt's up 25%. I'm up 21%. And Steve is up 4.5%. It's crazy. I did not have a lot of belief in Amit's portfolio because he was picking names that had run a lot, but yet that run just continues to compound for him. AMD up 76%, Hood up 78%, Palantir up 28%, Nebius up 96.6%. That was a really, really good pick for him. And AppLovin's my biggest one, and I'm not even holding on to that anymore either. But yeah, I wish I had rotated, did not pick ServiceNow, and instead picked SoFi, and I would be in a different place today. Jeez. No, this is not this is not profit and loss. This was a stock draft that we did, like a game of, we put up, I think, like 100 tickers, and then we had to pick. But once someone took that name, no one else could take it. So I think we did this mid-June, like June 12th or something. So from June 12th to now, we're almost at the 6-month mark, which is where we are so far. And yeah, I completely wait, what is this? Is this real? Sanjeet, are you being honest right now? I can do Ethereum? Hold on. I'm sorry. I'm a little bit of a spreadsheet geek, so I got to do this really quick. Let me see if this works. I didn't know currency was a thing. ETH, USD. Oh my gosh. Sanjeet, let's go. That is so okay. So here's a little update for the course members then as well. I'm going to start to track my crypto holdings as well, because I have some Bitcoin, some Solana, some Ethereum, but I didn't want to just manually plug in the updated prices each and every time. So now that it actually tracks the real price and will track my holdings, I will include my crypto holdings in my total portfolio. I didn't realize that. So hold on a sec. Can I do this across? I just assume it's BTC USD. Yep. And I wonder if Sol, this is going to be the real test. Oh my gosh. Let's go, brother. Thank you so much. Is that not how you say his name? My apologies. That's just my bad. Okay, let me clear my nose really quick. I'm going to blow my nose. Okay. Yeah, that is... Can you show us on screen? What, me, my portfolio, or me blowing my nose? Keep the camera on. No, thank you. Free membership for Sanjeet, no? We gotta mod that man up for sure, but that is way too good. I'm super happy about that. I apologize. I needed to have my little Excel fun there. We're here for the real content. You guys are too funny. But the nose. Okay. We need to see. He's probably so behind right now because whenever I asked about how Ethereum cannot be put up on Sheets was like, I don't know. an hour ago, an hour and 20 minutes ago. So the fact that he might be a little bit behind before he knows how much he's appreciated on this channel. So what was his name, by the way? Can someone go back? I do want to mod an absolute gent like that, because if he knows this much knowledge about Google Sheets, there's definitely other things that he's holding back from me that I don't know. And that would just be fantastic. Someone put his @ in chat. Okay. Look at the sell-off, by the way, on NVIDIA. Like you just cannot keep the momentum on this name. Okay. Let's check on CNBC, see what the heck is going on. There was the one of the lead Apple chip leaders that said that he's not leaving anytime soon. That appears to be one of the top videos that's going on for Apple, because a lot of their team has been poached by names like Meta, for example, which had given some concerns, but I don't really think it's too big of an issue. Maybe there's something that I'm missing. Maybe we can watch this. But let's have a little peek, shall we? Here.
Another new report on what's happening in the top levels at Apple. Steve Kovac has that story for us. Hey, Steve.
Yeah, Mike, lots of changes there. And by the way, this is all after lots of big shots in Cupertino have been getting those new careers for the holidays. Several changes have been happening in just the last 7 days, on top of several departures over the last few months. Now, someone not leaving, that would be chip boss Johnny Srouji. Now, let me give you a little drama that happened over the weekend. Bloomberg reported that he had told Tim Cook he wants to step down from his role. But this morning, he told staff in a memo he's not leaving anytime soon. That's according to the full email that I saw that just got sent out moments ago. That would have been a big loss, because Srouji has been instrumental in ditching Intel chips over at Apple. You can kind of think of him as the Johnny Ive of chip design. But look, some of these shakeups that have been happening over the last several days, it's really to meet the AI moment. The world has been changing around Apple over the last few years as it kept things mostly the same. Now, next year is going to be a monumental one for Apple after it failed to deliver on AI this year with that Siri update that was supposed to happen in the spring. And they have to get that one right. Now, AI boss John Giannandrea, he was stepping down last week, and those AI teams that he was once overseeing have been reorganized to make all of that happen. And that needs to work before they can launch AI-powered products like those rumored glasses and a smart home product next year. On top of all that, you have Apple's 50th anniversary coming up in April, a looming antitrust trial, and so much more. Now, there's different things going on here. It's kind of a case by case with each executive, but some of these changes that are happening are to meet that AI moment. But a lot of these recent departures are also leaving voluntarily. I'll also point out something happening at the board. Apple's rules say you have to step down from the board when you're about 75 and going for re-election. Most of those people I'm showing you right now, including Chairman Art Levinson, they are at that age right now. So we could expect to see some more board changes sometime soon next year. But overall, we're going to find out next year if this team in place is the right one to help Apple meet that moment, guys.
What about Tim Cook himself, with some questions swirling lately about how long he'll stay?
Yeah, Sarah, Andrew and I were talking about this on Squawk Box. With all these changes going on, if part of me thinks if Cook was going to leave early in the year, as that report that you're referring to said, we wouldn't be seeing those changes now. Typically, when a new CEO comes in, then they make those changes. But if Cook was planning to leave anytime soon, you would have to think some of these would have waited until after he steps down. So it seems like, at least reading in between the lines a little bit here, he's going to stick around at least for next year.
And Steve, if we can sort of read into the net effect or the net message from all the comings and goings in terms of where it does leave Apple with regard to its approach to AI or what its priorities are there?
Yeah, it's a reset moment. It's Apple saying, kind of admitting that they got it wrong the first time. They pushed out the guy who was in charge of that. He is gone now and being replaced. Basically, his responsibility got distributed among some other executives. They did hire one new AI chief at a lower level to make all this happen. But that's the signal after so many months questioning what's going on in Apple with artificial intelligence. How are they going to make up for the failure this year? This is them saying, we got the team in place. We're on track to do it. And so now we'll have to see if they can actually deliver early next year, guys.
Guys, there's no other way to explain what the heck is going on other than algos. Really quickly, however, this was just reported on a few minutes ago for the Google lovers. Google says its first Gemini AI glasses are coming in 2026 with both display and audio focused versions built with partners like Samsung, X-Rail, Warby Parker, and Gentle Monster. By the way, if this is what it looks like, this looks... Yeah, I mean, this actually is the one. Project Aurora, a prototype pair of smart glasses developed by Google and X-Rail. The sort of camera placement rate on the nose bridge there, I think, looks insane. I don't like that. That being said, I don't know. I still would like a pair of smart glasses if they can sort of replace what I'm already wearing and they're culturally appropriate to wear. My only concern is that if I have sort of a camera on my face that people will tell me to almost put it away, but they're my real, vision glasses. My understanding is that the recording, and this should probably be a law, is that there needs to be some sort of light on to make sure that it is recording. And if you cover that light, I'm pretty sure this is what Metas do. If you block that light, then it will not record. If the light knows that it's being covered, that it will not record. Maybe there's a way to get around that, but yeah. I do not break my glasses. I have not broken a pair of glasses since I was like a kid, so hard to break them whenever you go from your bed to the, computer chair to doing nothing physical. There were a couple times whenever I was doing jujitsu where I'd like start rolling, I'd be like, wait, I have my glasses on and I need to take it off. Aside from that, like, no. There are loopholes with the Meta glasses. Got you. Google monetizing Gemini with ads. Yes, we covered that. Google is doing exactly what I think everyone was expecting with Gemini, was with what is just put this into every single one of their parent products, or family of products. YouTube, put it into the glass, put it into the hardware, put it into Sheets and email and all of these things, and then use those connected apps to get huge amount of context across that family of apps for the users that you're dealing with. If Gemini knows that I am, one, that I have a YouTube channel focused on finance, and it also has my emails, and I also have glasses where it can see what I'm doing and what I'm working on, it should be able to put those pieces of context together to give me really, really great responses. That's where I think things get pretty interesting. Okay, so happy that I got that, by the way. I know people are making fun of me, but the people who do Sheets and Excel, like, you find out a nice new little formula and you're like, oh, wow, this works. Mwah! Beautiful. And I don't have to go and sort that information from an individual website where they might end up changing the code and stuff like this. So then you're sort of like HTML lookup thing ends up breaking. I hate that. So I try not to do that. I try to do things that are focused in Google Sheets so it doesn't break. Google Finance will not break if it has it coded in. So yeah. Culturally appropriate to wear. What I mean is that whenever someone sees you with these stupid glasses on, people will go, that looks ridiculous. Can you take off those massive 1 pound glasses that, Mark Zuckerberg was wearing on stage? Like, it just looks ridiculous. And you would be made fun of. And if you're not made fun of, I would make it, I'd make it my effort to go out of my way to make fun of you for wearing those stupid glasses. No, I'm kidding. But so I think that there's one thing of making something practical and useful, and then there's another thing of like, even to some degree, like I show you guys that I have an Android. People go, "You have an Android?" Like, this is almost culturally not appropriate. There's some people in chat that have just realized I have an Android. Are like, "Oh my gosh." That's what I mean. Not that it's offensive, but just that it's ugly or not cool to have, I guess. Okay. Let's check the overall markets. Are we sort of starting to bleed off? The SPY is up, or sorry, down 0.4%. And the triple Qs are down, well, roughly 0.4% as well. Not bad. iPhones are what the cool kids use. Oh, I'm aware. I'm aware. I've never seen anyone mock an Android. Well, you have not met my girlfriend, because she makes fun of me every day for the last 7 and a bit years. You know, just tears me into the ground. All right. Let's hear about, actually, no, I don't want to hear about that. Let's see. What else is in the news, guys? What can we find before 2 o'clock to get this thing on the road? Ooh. A new conversation with James Dyson. Very interesting company. Although I might not invest in that company if I had the choice, I do love a lot of these like really new type of thinkers for products like Dyson. I find that a very interesting company. The Pixel is the greatest phone. And you know what? It is true. And I don't have one right now, but I would love to have one. I just, nothing's wrong with my Samsung, so I'm not going to replace it right now. But it's not like I have a case on it, so let's hope that it breaks soon. No, I'm just kidding. I'll never use a case. Okay, what's happening to NVIDIA now? For anyone popping in, they did end up seeing confirmation, or at least, well, leaked confirmation. So it's not actually confirmation, but that H200s will be able to be sold to China, which has already been rumored for the last 2 weeks. But little sell off on that news. Literally, NVIDIA cannot catch a break. It's so funny to me. People, it's like I don't understand whenever you take a look at this business and you look at their financials, how you can be bearish. And well, let me preface that with, I'm fully aware that people look at this company and they say, you know, it's a cyclical business. Things can change. The technology changes so fast. So you never know if they're going to maintain being a winner. That sort of stuff is, I guess, viable, right? However, I just take a look at this business. This is just on revenue. We can look at margins in a sec, but like, if you take a look at gross margins, which is held up at 70+% rates and doing very well and expected to be even higher next quarter. If you take a look at operating margin, we're sitting at, 63, or sorry. Where was it again? Yeah, sorry, 63.17%, 60% in July, like doing great. If we take a look at actual margins here, net profit margin and free cash flow margin, like, here, wait, let me just take this down really quick. I shouldn't have taken it down. I should have just hit it. Net profit margin, 55%, free cash flow margin, 38.8%. Like, it's actually incredible. Their amount of free cash flow, if I can show this off as well, free cash flow, and then Capital expenditures. Their capital expenditures 1.6 billion, which was less than the quarter before at 1.9 billion. Like, compare that to what you see from all of the other Meg 7 names. It's incredible what they're doing. My personal opinion. Okay. But let's go back to revenue year over year. And this is up to October 2025. Okay. 62.5%. Next quarter, and we can verify this. I'll go to investor relations here. We'll go to their last quarter and go to the report. Let me full screen this really quick. And then where did they... Outlook. Revenue is expected to be 65 billion plus or minus 2%. Okay. This is for fourth quarter. That's next quarter, fiscal year 2026. So this means like don't get confused. That's not actually 2026. It's their fiscal year 2026. It just means it's a month off. It's actually fourth quarter 2025, but like November, December, January. Anyway. 65 billion. That's where Wall Street should be. Because another thing that I want to highlight is where they've been previously. So, okay, wait, let me stick on one thing at a time. I've got crazy ADHD and my brain's working faster than my hand here. If we go ahead and look at quarterly and fiscal AI is pretty cool because it'll build in next quarter's expectations from Wall Street. They have all the estimates here. So you can see revenue consensus. We'll put it to quarterly for next quarter. Which is actually is 65.5 billion. Okay, because I was getting confused on that. And I'm like, what the heck? Like, how is it so low? It should be above 65 billion. But on the chart here, it was not showing 65 billion. I was like, what the heck is going on? Yeah, January is showing 61.8 billion. I was like, how are they so low on expectations? And we can double check that with another company really quick. Let me just make sure that that is what Wall Street's holding up. Yeah, Wall Street is holding up 65.5 billion. Okay, good. Because I'm like, how is that even possible? Along with that is an acceleration of growth rates, 63+%. So you're expecting more growth than last year. And I don't just mean in a dollar amount. I mean like legitimately in like percent growth as a $4.5 trillion business. You can't find companies that grow at 60+% rates. Like, we get very excited about SoFi on this channel. I get very excited about Shopify. I get very excited about a lot of these businesses. None of them are growing at 63%. You know? And then on top of that, it's what's going to happen with the margin. So let's go back. We'll go back to the report. We'll go down to the outlook again. Gross margins are expected to be at 74.8%. GAAP and non-GAAP operating expenses are expected to be, we'll look at just GAAP because that's, we'll be more conservative on it. 6.7 billion. And then that's going to also include approximately $500 million of an added other expense for them and tax rates of about 17%. Now, if I'm not mistaken, where is it? I'm pretty sure I built a chart around this. So I added up all those numbers together. Where's my NVIDIA chart? Like, it's showing an unbelievable amount of growth just in their own outlook. Increased way higher than what Wall Street was at, and yet the stock is lower than where the quarter was at before. I just don't know how this happens. Okay, for real, where's my NVIDIA chart? Okay, there we go. Okay, that's perfect. Okay, so I just built a couple charts here before. I'll full screen this so you guys can see. And let me just drop the chat really quick so people can see. Assuming that they get 65 billion of net income, this is for next quarter, that would bring the growth rate up to 65.26%. Maybe it's a little small. I can bring the text up a little bit. 65.26%. I'll also do this as well. Okay. Then, if we then take into account what they said of the 67.8 to 65%, so cut that somewhere in the middle, 74.8 to 75%, 74.9% cut rate in the middle. That's $48.7 billion as a guide for gross margin next quarter. Margin has improved and revenue has improved as a growth rate, meaning the total dollar change will be the biggest quarter we've ever seen in company history. Okay. That flows down. Once we add in those expenses, once we add in that operating margin that they said, so now we get, an operating income, add on that tax rate, everything like this, we get a net income. This brings their margin to 56%, which is higher than last quarter, not the highest we've ever seen, but one of them, and bringing in $36.5 billion of net income. Have we lost our minds? With this money, they're investing in future companies that, you guys can say is, circular financing or something like this. To me, what I think it is, hey, they have too much cash to just go ahead and buy back shares. They can go ahead and invest in faster growing businesses than them. There's no debate that OpenAI or Nebius or CoreWeave is growing faster than them. They're growing at more than 60% year over year rates. So they're betting on companies that are very fast growing in their niche and are powered by NVIDIA. So just like Google, just like Microsoft, just like many of the Mag 7s before them, they have a venture arm. It's not just about the growth of the business. It's about, hey, can we invest a lot of this capital because we're so cash rich, right? And so this 36 billion is going to go towards a bunch of different things. But I don't know. Maybe I'm too excitable on this name. I don't know. But I remain positive. Stock is up 1.5%. What a drawback. Tell me, am I wrong? What are the concerns? Are we still in fear on the index? Everyone's saying 33. I believe you guys, but let's just bring it up for the rest of the chat. Looks like we're going to be at 33. Yeah, we are at 33 on the fear and greed. Which we were at 38 this morning, if I'm not mistaken. So, a little bit of additional fears. Yesterday was a 40. 1 week ago, 24. Okay. Only concern is OpenAI's growth slows due to Gemini. Yeah, but that's perfectly fine. First off, NVIDIA still hasn't even invested in OpenAI. They have the ability to invest up to $100 billion. And even then, I think growth, quote unquote, slowing is them going from tripling every year to growing at, maybe double or 1.5x or something like this. Like, still one of the fastest growing businesses in the world. Okay. How long will big tech be spending $600 billion a year? That's the question. Well, I think for longer than people anticipate. I don't think people are wrapping their heads around what AI can do. Like, we're talking about a new technology that has its ability to not only, sort of replicate human actions, but then also think for itself and be like, okay, well, this is all the facts that we know. What's the next smartest business move in this decision? This could just be a customer service action. It could be a logistical action. It could be a routing for some sort of smart fleet that is a car driving model or something like this. I don't see how you can take a knowledge product and then put some sort of cap on it. Like, we're always going to have more use cases, the same way that we had more use cases for technology and social media and all of these things. Now we're just having this insanely ramped up version of that where there's going to be innovation, it's going to get smarter, but also the use cases are just going to explode. So I think that they're going to spend a ton. By the way, they're not spending $600 billion a year. That's not happening. You can look at the capital expenditures. Well, I mean, maybe across the market, there's 600 billion, but across big tech, it's probably closer to 400 million right now. Okay, the AI revolution is pretty exciting. I completely agree, right? I can't see how it's not. I don't know. Maybe I'm wrong, but I think that a lot of the products that are being put out from big tech are immediately accretive, and I don't think that the market sees it that way either. I think Meta, like, their advertising models are getting smarter, and so they can increase conversion rates. I think that it's going to be better for banks to be able to catch fraud, and so then they would, improve their transaction loss rates. That would be immediately accretive. There's not an industry that's not going 100% into AI right now. And so much of the world still relies on non-artificial intelligence accelerated products that, like, I think all of them will be one day. So there's still a catch-up play there, in my opinion, let alone all the future growth that we're going to see. It's like saying, this is the .com bubble. How much more are we going to invest in the internet? Like, everyone's going into the internet. It's like, okay, now look at us. We're 25 years later, and every single year, the amount of time spent online, the amount of money spent online, the biggest companies in the world have become all software and tech names. Like, to me, I think the trade of the last multi-decade can boil down as easily as this. Asset-heavy companies cannot move as fast as asset-light businesses. Software names have been able to move much faster, so they're given a multiple because the growth rates are higher and the margins are much higher. So those have become the biggest companies in the world. Now I think the next maybe a large trade there will be the companies with the biggest information advantage. There will be intelligence gaps. Which of the software names will be the smartest? That one will be the one that ends up winning over time. Not just making, the most amount of changes in their code, but making the sort of smartest improvements. Market's bleeding. It happens. It happens. I think NVIDIA, as we've even seen, is a very catalyst-driven stock. And just because the US has said that they are going to give out or allow for the sales of H200s does not mean that ends up happening. So until that is guaranteed, like, we wait. Yeah, it might give up the full gain, but the gain was a rumor. Like a lot of people say, buy the rumor, sell the news type thing. There was no news here. This is just, a rumor, and then people start to think, okay, well, what's the chances that this actually even happens? The more you talk, the lower NVIDIA goes. I mean, that's fine. I've talked a long time about NVIDIA as it's gone from, $5 a share up to $184. I'll be okay. I think when I was loudest on this stock also in recent history was during DeepSeek. You know, we were buying this at like $90+. Now we're more than double that. My dad's calling me. He's going to have to wait. If he calls twice, I'll answer. Then I know it might be an emergency. Okay. At the UBS Global Technology Conference, they said none of the potential revenue from the proposed 100. Yeah, no, 100%. Yeah, the massive deals that they had were not from OpenAI, was not from XAI, was not from Humane deals, was not from China. All of that is going to be additive to their business. Yeah. Let's see here. Just saw this from PayPal's own account on X. We can't promise holiday magic, but a shot at 100,000 in Bitcoin feels close. Buy crypto on PayPal or enter for free by mail for a chance to win this week. That's the thing, right? I'm pretty sure that in America, like a sweepstake has to be able to be free. So you can always enter like any of those types of events by mail. Buy crypto on PayPal. I'm sure it's not a very big thing, but maybe growing. Maybe they want to grow it. Let's check. Pepsi's up 0.5. They were going to review supply chains as talks with activist Elliott Management wrap up. Okay. Got you. All right. Should I buy the SPY? I mean, it's been a historically good purchase over time. I don't know what it means in the short term, but the S&P has done well over time. Trump talking? What's Trump saying at 2:00? Okay, well, it's not saying President Trump participates in a roundtable event, but I don't see him talking live. Oh, maybe he is. No. It's crazy how many views some of these like Trump crypto. Okay, wait, my dog's freaking out because I think someone just got home. 1 second. Okay, muted myself. Didn't my dog was freaking out. It happens. Okay, is this the executive order for the AI one overarching? I think that's what this is for, right? To have sort of one regulatory thing rather than 50 states choose what AI is going to do to not stagnate growth on artificial intelligence. It's crazy how close. Like, I understand not everyone is super positive on Trump and everything, and I'm not being political here, but I'm so happy that Jensen had become very close with Trump. And I hope that he does that with the next administration. I don't care what side they are. The idea for Jensen to be really close to the current administration gives them a leg up. It is the AI executive order? Okay. Okay, cool. You probably have more than 10 monitors. I don't have 10 monitors. I've got 5, I would say. I've got 4 main ones and then an iPad for comments and stuff. Just 4 monitors, but they are up there. They're not 10 though. That would be funny. Okay. Do you know where I can find that? I'm not seeing it actually live. Yeah. I see a lot of expected to hold one very shortly, and a lot of streams have started going into 2 o'clock. No? Okay, I'll keep an eye on it. It's open on my other screen. We'll watch it when he goes live. Yeah, rookie numbers. You got to get those numbers. Only 4 monitors. Yeah. And an NVIDIA chip to power it all, ladies and gentlemen. I got the 5080 just to make sure that the stream is nice and crisp and clean. We're going to have, ray tracing on our live streams here. Just need StreamYard to catch up with me. Paramount Skydance bid is 5 alert antitrust fire. What does that even mean? Is 5 alert antitrust fire? Says Elizabeth Warren. SoFi had announced a new Cosmos fund where you can invest directly in Stripe. Minimum of $25,000. You have to have $1 million net worth as well. But you can invest in Stripe shares solo. You do not need to invest purely in like a fund or something and end up buying a bunch of different names that you might not want access to. Okay. Google's just having a bad day. I don't even really think there's any news. I haven't seen anything. Let's see. Forbes. Okay. Google's putting ads on Gemini. Yeah, why is that? I did hear that. Why is that a reason to sell off? Are we an investing channel or are we a consumer channel? Like, that seems positive for the company. If it impacts the users, like, are we that silly to believe that if it impacted, Google's like retention rate on Gemini, that people would use it less or potentially switch to Grok or switch to OpenAI, that they would just keep the ads on just to punish their users? Like, they would just immediately turn it off. Google had news from Apple and themselves on hacking issues. Let's see. I'm not seeing anything immediately. Oh, is this the Apple urges iPhone users to pick Safari over Chrome for privacy concerns? That could definitely cause this to fall. Yeah, that could be it. That could definitely be it. That would cause a little issue. About 6 hours ago. Yeah, maybe that lines up here. Or maybe 8 o'clock roughly. It would be somewhere actually in between that, unless it did happen a little longer than this. I'm seeing it as early as 11 hours ago. That could definitely be it. Does anyone like Safari? That is definitely not true. That is not true in the slightest. 11 out of 10 FOMC members support a 50 basis point cut. No, that's not true. However, if you look at the Fed rate cut decision, there's a 0% chance of a 50 basis point cut. Not even a small inkling of a chance. There is, however, a 89.6% chance of a Fed rate cut. If Trump is expected to go live at like 3 o'clock rather than 2 or something along these lines, I don't think I'm going to be live for that. Safari, okay. Trump's talking about crypto. Please click off of that, sir. Yeah. You are actively watching a scam thing. If it's got a QR code on the screen, not my QR. That's so freaking funny. I was like, if there's a QR code on screen, good chance it's a scam. And I've got a QR code right underneath me for my Discord. An absolutely free Discord, by the way, just for users to talk. There's no it's just a free Discord. People are just talking in there. Don't listen to guys with QR codes. Do not do that. If Trump's got a QR code, that's a scam. He's not going to double your Bitcoin, nor am I. Nor am I going to reach out to you asking for, you to join my private investing fund or something like this. I'm not going to double your money. I do not do any financial advice. There's no private anything. Okay? Oh, that's too funny. The reason why I have a QR code is because I had it in the description alone, but then there was a lot of people that told me that they were watching from their TVs. So I had a QR code for the people who are watching on their TV. That's why. I scanned Tanner's QR code and my brokerage account got liquidated. I don't know if there's any. By the way, if I'm not mistaken, at least with Android, whenever I go to scan a QR code, it tells me what the link is before it actually takes me to that QR code. So you can verify that it doesn't say like, I don't know. Like if it says Discord, then there's a good chance. It's fine. Honestly, don't listen to me. Okay. That is too freaking funny. Probably one of the greatest clips I've ever unironically created is don't listen to people with QR codes on their screen. That is good. But yeah. Oh, okay. What else is there? I'm not seeing anything from Trump still. He's not live. There are some live streaming things of Trump with like 25,000 people watching, but I can promise you those are not. That's a very old clip of Trump and he wants your money. Okay. And it's not actually Trump. It's a scammer. And I wonder how bad that's going to get with like AI. Like if YouTube is not even pulling down these obvious scams, it's like, how are they going to be able to do this? Wait, is he live right now? No. Okay. Okay. There's a Netflix conference call right now. Wait, are they doing like some emergency conference call? 2:15. Yeah. Here, wait, hold on a sec. Can we listen to this? Is this about the deal or is this just about Netflix in general? Let's have a little listen. Yeah, they're talking about the deal.
Good opener. Go right for it. Look, today's move was entirely expected. We have a deal done, and we are incredibly happy with the deal. We think it's great for our shareholders. We think it's great for consumers. We think it's a great way to create and protect jobs in the entertainment industry. We're super confident we're going to get it across the line and finish. So we're excited.
Obviously, Warner Brothers is a significant deal for you guys and for the media industry.
Yeah.
Help us understand the rationale for the transaction and the benefits to both members and shareholders of the combination.
Yeah, one, we recognize that this is unexpected. We haven't done this before. So maybe just walk you through a little bit of how we think this creates value and sort of also how we get to there and think about how, what's the executability of all the theories that we built into the case. And so we've broken it down essentially into 3 phases. And it's worth noting that phase 1 is essentially between now and close. And phase 1, our job is to continue to grow our business. We've got a tremendous opportunity for organic growth that we still are very, very excited about. And our job is essentially to execute against that. And we think that that's relatively low risk. We know how to go do that. By the way, Warner Brothers will be doing the same in parallel as well. And then you get into the close period. And we see essentially this is where we saw 2 really big centers of value that we believe are highly executable and we can implement in this phase. The first part is there's a bunch of titles that the Warner teams have that we think that there's more value to unlock in. And we think we have exactly the platform to go do that. We've got incredible reach. We've got a project experience that maximizes the value in content. This is the business that we are in. Essentially, we are constantly in the business of evaluating various different licensing opportunities for titles and then trying to figure out how do we maximize the value of that asset on our platform. So again, that's something we do day in and day out and we think is relatively low risk to execute. The other component is around HBO, the brand and the service. And HBO is an incredible brand with an incredible history. It speaks prestige TV. We want to double down on that concept. And then we think that that gives us an additional lever, additional tool, essentially to think about how do we decompose plans and offerings for different consumers that give them the right kind of entertainment they want at the right price point. And we think that we are in the business of doing that kind of optimization. And it sounds like that might be hard to go do, but recognize we've just done that. We've done that with our ads plan as an example. We've had to think about how do you compose a set of offerings that maximize value for the business while keeping consumers happy with different offerings. So we see that again as completely executable, and we know how to iterate and solve that problem as well. And just to be clear, that's when we sort of built our valuation model and sort of set the price, those are the centers of value that we really put into that. And so we felt like, hey, we can go achieve on these things. There's a third phase, which is where you get into, we've got amazing IP and all sorts of things that we can go deliver on this. We believe, we're very confident that there's things that we're going to unlock that are value there. We actually don't know exactly what those are, so we didn't give ourselves credit for them in the valuation model. So we think we've been appropriately conservative about building, value where we think we can actually go deliver it. We think we can deliver more. There's upside in the deal at the end of the day, but we're super excited on being able to deliver on those pieces.
Yeah, and I would just add to that, we're obviously there's the direct-to-consumer streaming business, which we're deeply committed to, and for both companies. The consumers love it. I think it's something that we're quite good at. In this transaction, we pick up 3 businesses basically that we're not currently in. So meaning we have no redundancies currently, but and one of them is a motion picture studio with a theatrical distribution machine. And so there's been a lot of speculation what we would do with this. And I think it's really important to note that we haven't talked at all about what we're going to do with this, but what we are going to do with this is we're deeply committed to releasing those movies exactly the way they've released those movies today. All three of these new businesses, we want to keep operating largely as they are. The theatrical business, we've not, been talked a lot about it in the past about wanting to do it because we've never been in that business. And when this deal closes, we are in that business, and we're going to do it. So think about it. If we did this deal 24 months ago, all of those movies we saw this year do so well at the box office for Warner Brothers would have been released in the same way in theaters. Talking about Minecraft, I'm talking about Superman, I'm talking about Weapons, all those movies that Sinners. These movies will be released on Netflix through theaters the way that Warner Brothers did it before, but with the Warner Brothers operating entity. We think it's really important the way that they create and the way that they drive value. We didn't buy this company to destroy that value. The second one is the television studio who produce and license content to third parties. Also, we were never in that business. We are now. And I think it's an important thing that and when we get under the hood, that's a really healthy business. It's not as big as ours, and that's why we haven't really focused that much on doing it. The growth opportunity in our core business has been greater. But now in this transaction, we own that business. And Channing and that group do a phenomenal job. And we want them to continue to do that phenomenal job. And then HBO is another example of that, which is, as Greg said, this is a prestige television brand that people really love. And I would say that they have been doing gymnastics to make themselves into a general entertainment brand. And I think under this transaction, they don't have to do that anymore. We're already a very well-established general entertainment brand, and we want HBO to double down on the things that people have loved for 50 years about HBO, the fact that prestige television and movies in the various pay TV windows. These are the things that we're going to keep going in this business. And I think when we looked at the whole deal, you'd see that their assets work better in our business model, and our business model works better with these assets.
Got it. That's clear. Regulatory approval is obviously a big question we're getting. How the market is defined is a big part of that process. How do you define the market, and what gives you the confidence the deal gets approved?
I think we'd want to start by saying it's not our position to tell the regulators how to think about this. The regulators have to do their work and define the market in a way that they think is right. Clearly, they'll do their analysis, and we'll support them with whatever they need in that regard. But if we go back to the fundamentals of this deal, we are very confident that regulators should and will approve it. At the end of the day, it's pro-consumer, delivers more value to those folks. It's pro-creator. We're going to increase our content spend and deliver more. That's great for them. That means it drives jobs. It's pro-workers in that regard. It's pro-growth. It's pro-innovation. So we think we've got a good story for all the constituents that we have. And then if you step back, and we brought the slide around just to sort of talk about how
feeling this might come up.
Yeah, exactly. We thought that this might be a topic, and we just want to really, bring the facts to this conversation, because if you look at Nielsen, this is Nielsen number of, view hours on TV in the U.S. You can look at the year left right there. We're sixth in the current ranking right now. We're behind YouTube, we're behind Disney, we're behind NBC Universal, we're behind Fox, we're behind Paramount. And then if you say, okay, well, you're going to go buy, HBO and HBO Max, put that viewing on the list, this is what that would look like. We go from 8% of view hours today in the United States to 9%. So we're still behind YouTube at 13%. And potentially worth noting that we would be behind what would be if Paramount combined with WBD, them at 14%. So we think that there's a really strong fundamentals-based case here for why regulators should approve this deal. When I pick it up from there, I think. Yeah.
I was going to say, and how should we think about the president's recent comment?
Yeah, I think you should think the president cares deeply about American industry, and he loves the entertainment industry. I've talked to him many times since the election about the different challenges facing the entertainment industry. He definitely understands the dynamics of what we were just talking about. The television is a very broad landscape and view hours is probably the best way to capture it. What people are watching on TV, it might be cable, which we do not own any cable channels, or it might be a network, which we do not own a broadcast network, and it might be streaming, and these things trade off pretty broadly. I would say it's very important that what the president has been interested in this deal has been, to what extent does it protect and create jobs in America? And he understands what we do, which is that we drive a ton of great work in America. Our original productions have employed 140,000 people to 2020 to 2024. Our economic contribution to the U.S. economy in that production has been about 125 billion. We are producing in all 50 states. We've used 500 independent production companies to make content for us, about roughly 1,000 original projects. And beyond just the jobs, we're also investing in the entertainment ecosystem. We're spending $1 billion building a studio in New Jersey right now, built on the old Fort Monmouth military base. It's been empty for about 13 years, and it's revitalizing the economy all over that area. We have 11 films in production right now in New Jersey. We have a fully running a studio we built in New Mexico. It's been a great job center and a great jobs training center. We've got many of our shows that we're shooting there. So we continue to invest in this. And again, I think that the president's interest in this are the same as ours, which is to create and protect jobs. In this merger in the offer that Paramount was talking about today, the Ellisons were talking about, $6 billion of synergies. Where do you think synergies come from? Cutting jobs. Yeah, so we're not cutting jobs, we're making jobs.
Makes sense. So up until this deal, the company and its strategy has been very simple and straightforward. Do all these benefits outweigh the increasing complexity you're going to experience by putting these two companies together?
Look, I think we built this company on a very simple proposition. We actually had one SKU for the longest time.
Right, one model.
One model. And that helped us build a really strong foundation. And the idea of that was you build a really strong foundation, and then you can introduce new complexities to the business for future growth. And we have now been doing that pretty successfully, I think, by doing things that people would argue are pretty complicated.
And we've never done before either.
And we haven't done any of them before. So the simplicity of, remember, we started making original series, our first original series. We weren't doing movies then. We weren't doing unscripted then. We weren't doing international originals then. And now we do all those things very successfully. And producing in 50 countries today is pretty complicated. Greg, you've talked about this ingest model that we've been doing with TF1. I think it's
something new that's been fresh as well. I mean, it's involved like standing up whole new businesses that we've never done before. We've never done live before, we've never done ads before. So all great examples of, us extending that core foundation and building on top of it.
Being nimble. Like I said, I do think that simplicity was an early superpower, I think, of ours. And today, I think it's enabled us to do things that are really much more complicated, but also chase bigger prizes.
I think, we still want to be choosy. We've always been from the perspective of you do a small number of things, but you really do them to win. And that's sort of the same angle that we're taking towards this opportunity as well.
It seems like a lot of the initiatives that you've had are sort of reaching their, not conclusion, but you're far enough along on the ad side, you're far enough along on other businesses. There's more room in terms of management.
And I think all these things would benefit from all those things.
It might be, there's maybe two statements in that. Is like one of our core theories has been that everything extension we do has got to have leverage from the core and lever back in success, right? And you say, we're far from done. I actually think about it quite the other way. I look at it as like we've reached sort of like escape velocity on some of them, but there's that middle part of the growth yet that's still to come.
Makes sense. Now I realize it's early in the process, but has there been any talk about management continuity within the Warner Brothers assets, just given all the talent there?
Yeah, I mean, and it goes a little bit back to our core theory and why we like this deal so much, because we really do see it as a complementary situation. If you think about the core business units that exist inside Warner's that we would be acquiring, we don't have those units right now. So we don't have the redundancy issue. We're not trying to consolidate, drop down, one studio to two studios to one. That's not the business we're in. And so actually, we love these businesses. We like the leadership. We've got very strong people that are in charge of that. We, as Ted said, we anticipate executing and running those businesses as they are. Again, there are businesses that we looked at before and we weren't opposed to it. We had other things to go do. We had a long list of things that felt like were, higher priorities for us. But now that we have mature, well-functioning units coming as part of this, we're excited to have those be run by their leaders, operate well. And we think there's a ton we're going to learn from them about operating.
I think back to what you kind of said earlier, but I think this idea that we're not collapsing the studio. We are actually strengthening one of the most iconic studios in Hollywood by giving them a healthier business model to operate in and continue to release movies into the world largely like they do right now.
I mean, just pivoting on that, the combined company will have about $30 billion in combined content spend per year, making you by far the biggest spender in terms of entertainment content. How should we think about the content strategy for the company post-deal, both in terms of how the money is spent and then how the content is distributed?
Well, look, I think the beauty of this model has been that it scales. And I think when you look at it and say, what has been the strategy is to continue to generate more joy for our members, that pays back in retention and word of mouth and all the positive benefits to a subscription business. But to do that, you have to have great content, a lot of things to watch. And that's what we keep investing into. So that 30 billion, it's a big number for sure, but it's like we've been growing organically to that number prior to this transaction. We're going to get there faster. And after the transaction, we're going to continue to grow on that trajectory. Just giving them as we improve distribution of those other titles, of those other assets in the Warner Brothers library, we're able to then continue to reinvest because we're pleasing members more and more and more, and they see more and more value in the business.
And getting more leverage off of those assets as
Correct. And then we do pick up some other distribution systems that we didn't do before, but those are very healthy businesses. They're just not as big as the direct-to-consumer streaming business, but they're very healthy. We want to keep them going.
And they're additive.
Yeah, 100%.
All right, so maybe pivoting away from the deal, and we'll come back to it in a bit. How would you describe that?
Okay. I don't care too much outside of the deal, so we will get away from that and look at some other things. Devin Ryan was just on FinTech TV this morning. Let's see what he had to say. There's only a 1-minute clip that's been released so far, but I think he's talking about the sort of why he's bullish on cryptocurrency. I'm interested to hear from him.
Well, I understand that you said we are at an inflection point. So
the audio is terrible. It's only a 1-minute clip, so please push through with me. I do want to hear this, but this audio is bad.
To actual mass adoption.
So I think we're getting very close to that, and really, the pieces have to come together here. We're still working in a kind of a regulated world where the rules of the road need to be formed for crypto, and they haven't been there for the past, and that's been challenging for real institutions to come to the space. But what we've seen this year is kind of pivotal moments. You had the Genius Act pass, which kind of opened the door for stable coins to be able to be in the regulated world in a real way, and we're seeing really nice scaling there. But the bigger piece that's coming, in our opinion, is around tokenization, and tokenization is going to come together with the Clarity Act, which is sitting in the Senate now, but we think we'll get passed over the next few months. And once that happens, that's going to start this kind of big surge of traditional financial institutions coming in to the space, and that's going to drive the mass adoption that we think is coming. So, 2026 is going to be a huge year. I don't think we'll necessarily get to full mass adoption, but the pieces are coming together where it's kind of right on the horizon here.
I mean, all right. Also, there's been this leak, and leak is such a loose term here, about them buying BVNK. It's not true. Okay. There's nothing to show that there was them saying that they wanted to build an L1. Just seems like a complete miss of what the term L1 means, because there was a lineup between their product called Layer 1 and then Anthony Noto saying that he wants to build an L1 blockchain or a Layer 1 blockchain. That's just what the tool is called. That's like saying, we want to use a different payment provider, and then, that means that they've acquired this company called payment provider. That's not true. It's just the term is used for a lot of things. So, in my opinion, there's a lot of things going around online about leaks on SoFi, and none of them are leaks. None of them are leaks. Nothing's happening. We don't know yet. That's why SoFi stock is just not bouncing or doing really anything concrete on that news. Yeah. Trump is speaking now? Okay. You guys are the best. Let's bring this up.
Making a lot of money from countries that took advantage of us for years. They took advantage of us like nobody's ever seen. Our deficits are way down because of tariffs. I guess because of the election, because without the election, you wouldn't have tariffs. You'd be sitting here losing your shirt. But we're taking in billions. We're really taking in trillions of dollars, if you think about it, Scott, because the real numbers, when you think of all the money being poured into the country for new auto plants and all of the other things, AI. So what we're doing is we're taking a relatively small portion of that and we're going to be giving and providing it to the farmers in economic assistance. And we love our farmers. And as you know, the farmers like me, because, based on voting trends, you could call it voting trends or anything else, but they're great people. They're the backbone of our country. So we're going to use that money to provide $12 billion in economic assistance to American farmers. $12 billion is a lot of money, Meryl. What do you think? Peanuts for you, though, right? Peanuts. She's a farmer of rice. This relief will provide much-needed certainty to farmers as they get this year's harvest to market and look ahead to next year's crops. And it'll help them continue their efforts to lower food prices for American families. And again, we inherited something that we inherited the worst inflation in the history of our country. And we're taking care of it. Farmers are an indispensable national asset, part of the backbone of America. I've always felt it so strongly. They're so important. Unfortunately, under sleepy Joe Biden, he's a sleepy guy. Our farmers were crushed by the worst inflation in modern history and crippling restrictions on energy, water, and countless other necessities for farmers. And what they did to the farmer in terms of putting the brakes on was just absolutely unacceptable. In my first term, we had an agricultural trade surplus by a lot. We had a big surplus, meaning we were exporting American agricultural products all over the world, making a net profit, and in many cases, a very substantial profit. He came in and ruined it. Biden turned that surplus into a gaping agricultural deficit that continues to this day, but we're knocking it down. It's starting to go very good. In fact, China, as you know, is buying a tremendous amount of soybeans. And the number, I spoke with President Xi recently, very recently, and I think he's going to do even more than he promised to do. So I think the relationship is a very good one. I think he's going to do more than he promised to do. And what he promised to do is a lot. So we're very happy with that. In the last year, Biden bankruptcies rose by 55%, having to do with farms. So farm bankruptcies under Joe Biden went up 55%. That's not good. But now we're once again in a position where a president is able to put farmers first. But unfortunately, I'm the only president that does that. On day one, I terminated the Green New Scam. Energy prices are down. Gasoline prices are down. We slashed record numbers of crippling regulations, and we're working on huge trade deals already, securing $60 billion in agricultural purchase commitments. And, Biden made none. He didn't make any trade deals having to do with the farmers or any of it. It's crazy. China committed. He was the worst president in the history of our country, by the way, in case anybody has any questions. China committed to over $40 billion of soybean purchases, and that's a commitment. And I asked President Xi if he could even up it. And I think he'll do that. I mean, not a commitment. 40 billion is a commitment, but the soybean farmers are quite happy. Since my successful meeting in South Korea with President Xi, purchases have been made and soybeans are being exported out of the United States to China as we speak. And I say that our soybeans, I told this to President Xi, our soybeans are more nutritious than competitors. Somebody said, is that a Trump statement or is that real? In fact, you know who asked me that question? President Xi asked me that question. He said, really, I had never heard of it. And he was a food purchaser for a long time. But that's what I hear. And Japan agreed to $8 billion in purchases of corn, soybeans, ethanol, fertilizer, aviation, biofuel, and rice. Japan never bought rice from anybody else. It's like a very important thing to them. And they agreed to buy rice, okay?
Absolutely.
So I also proudly signed into law the largest tax cuts in history, and the one big, beautiful bill, the monumental tax relief bill that is benefiting very, very strongly, benefiting the American farmer. And I think also for farmers, we have, as you know, and we got this, the estate tax or the death tax, as they call it, on farmers, on small businesses. You don't have to pay it anymore. A lot of farms, you love your children, and your children are great, and they want to be farmers, and you leave the farm and your children, and A lot of farms are, sort of cash poor, land rich, cash poor. And the kids would go to the local bank or to any bank and they'd borrow money to pay the estate tax, and they'd end up losing the farm. They go bankrupt. And a lot of debt too, literally, because they love their farm and they love their business and they love that way of life, they end up committing suicide. A lot of suicides. We have no more estate tax. How about that? Do you have children?
I do.
Well, let them know. Now, if you love your children, then it's good. If you don't love your children, you don't have to leave them anything. It doesn't matter what I just said.
They're
But
still young. I still
I
love
have
them.
a feeling you love your
I
children.
still love them.
I have a feeling you love your children. But the estate tax is a very big thing. So you don't have estate tax. You die, you leave your farm or whatever, or small business to your children. You don't have to pay estate tax. It seems to affect the farmer more than anybody else, because you can have a farm that's very valuable and therefore you have to pay a big tax, but it's not a big value in terms of cash. Maximizing domestic farm production is a big part of how we will make America affordable again and bring down grocery prices for American families. And again, these are prices that we inherited. When I left, we were doing incredible. In 4 years, what they've done to this country and so many, and not even mentioning the border and the criminals allowed into our country and all of the other. So I just want to say it's a tremendous honor being with you. I'd now like to ask Secretary Rollins to provide some of the details, followed by Secretary Bessent, Director of the National Economic Council, Kevin Hassett, Senator Bozeman, Representative Scott, and then we go to a couple of the farmers' representatives, but we'll all get involved a little bit. You can speak. Anybody is shy to speak in front of the press, and I don't blame you if that's the case, but farmers, Court Holub and Merrill Kennedy will say a few words also, and then we'll have a little discussion, okay? Madam Secretary.
Thank you to the greatest boss in the world for a long time now. It's just an honor to be here. I'm going to keep my comments very short because I really want to make sure that you and the world gets to hear from our farmers. So a couple of quick points. Number one, this country and our farm economy is facing a crisis that we inherited that most of these farmers have not seen in their lifetime. Profitability is down. It's just one crisis after another. When we came into office, sir, when you did and you were sworn in on January the 20th, as you mentioned, not one new trade deal had been struck in 4 years. The cost of inputs for our farmers, fertilizer up 36%, manual labor up 47%, interest rates up 73%. When you combine the cost of inputs for our farmers married to no new trade deals, and then you're facing an administration whose priorities were DEI, climate change, putting the farmer aside. I mean, it was an absolute war on agriculture and on our rural communities. That all changed on January 20th. So as, sir, we are working, and you have been just so resolute. I mean, these are our people. Rural America is the fabric of our country. This is the way of life that preserves the American dream for the next 250 years as we celebrate the first 250 years. So we began to go to work immediately. What these elected officials...
Is there planning on being an AI executive order? Because if not, I'm not going to listen for too much longer.
Of our lifetimes, we will begin to see that effectuated next year in 2026 as we have fought to bring input costs down. You have talked about, and even this weekend did an executive order, signed one on looking into the reason that so much of these costs have been driven up over and over. Equipment, again, fertilizer, seed, et cetera, et cetera. We have to make sure we understand why that is. And then the continuing of the additional trade deals across the world. No longer will America be held and beholden to the regime of other countries' tariff infrastructure. Instead, we are moving our products out across the world. Having said that, and we have been listening to the farmers for the last 10 months, 11 months, sir, that the bridge that is needed to get from the last administration and what basically happened under the last president and the last U.S. Department of Agriculture to this new golden age for farmers, where instead of farming for government checks, they can farm to feed their family and sell their products and pass it on to the next generation, that this bridge is absolutely necessary based on where we are right now. So as the president said, we are very pleased to announce that today we are going to be effectuating an $11 billion bridge payment to our farmers. The money will move by February 28th of 2026, but by the end of this month, so just in the next couple of weeks, every farmer that is able to apply for it will know exactly what that number looks like. So as you are going to your lender, as you are working to ensure and understanding what you can plant for next year, you will have that number in hand. And we will continue to talk to our farmers, continue to understand.
Okay, so while I just wait to see if the topic does change here, if there's going to be a Q&A as well, because almost always it's off topic, which is good. There was a question. Am I doing the market close today? I'm not planning on doing a market close. My expectation is that Amit will be back, so there will be a market close. There's also not any exciting earnings that I'll be covering today. I could take a look at tomorrow. We have GameStop earnings, if anyone cares. I don't personally. Wednesday is Oracle, Adobe, Synopsys, names like that. And then Thursday's the big day. And I care about a lot of names for earnings that day. We have Broadcom, Costco, Lululemon, Restoration Hardware. All four of those are very important. So excited to hear about that. But yeah. I can text Amit just to see, are you doing market close? Okay.
Trying to show us something, and it's really worked out really well. But because of the tariffs, this is possible. The other thing I'd like to add before going to Scott, and I think it's very important, we're going to also give the tractor companies, John Deere and all of the companies that make the equipment, we're going to take off a lot of the environmental restrictions that they have on machinery. It's ridiculous. I know, because I buy a lot of that machinery for different things. We have a lot of big clubs with, hundreds, thousands of acres. And I buy a lot of stuff, and you buy it, it's got so much equipment on it for the environmental, it doesn't do anything, except it makes the equipment much more expensive and much more complicated to work. And it's not as good as the old days. And we're going to take a lot of that nonsense off of the equipment, which is going to reduce, and we're going to do it. And we're going to say, you're going to reduce the prices. We're not going to do it, and they're not going to reduce. They're going to have to reduce their prices because farming equipment has gotten too expensive. And a lot of the reason is because they put these environmental excesses on the equipment, which don't do a damn thing except make it complicated, make it impractical. And you really have to be, in many cases, you need about 185 IQ to turn on a lawnmower now. So we're going to take that off, that crap off that they put on Biden mostly. And we're going to take that off. So that's going to make that'll bring down the equipment prices a lot.
That's right.
And we're going to do that immediately. You're going to work with Lee Zeldin, who's not here. He's doing a fantastic job.
All right.
And Lee is going to work that out. And that would be most of it. It's crazy. The machines, they're always under repair because they're so complicated that you can't fix them. The old days you used to fix it yourself. Now you can't do that. You have to be a PhD from, let's say, MIT. Okay, so we're going to get that done. Scott, please go ahead.
Good. Thank you, Mr. President. Thank you to the farmers to join us today. And I will tell all of you here that when either in person or when we are on a call with President Xi, the first thing the president asking for is more soybean purchases.
That's right.
We don't talk about geopolitics. We don't talk about trade. It's about soybean
We
purchases.
don't even say hello. We immediately start. Soybean. We start with the soybean, please.
Could you do a little? It's always, could you do a little more? So, and I think President Xi is heard President Trump. This group represents an American way of life that has fed our nation and its spirit for hundreds of years. You are the caretakers of the most productive agricultural country on earth. You drive hundreds
Really
of
wish they'd
billions
point the
of
mic
dollars
towards
in
him. It's
exports,
very quiet. I
support
apologize.
millions of jobs, and keep America's economy running strong. And this administration is committed to keeping it that way. By putting farmers first, President Trump is ushering in a new golden age for agriculture. The president's $11 billion relief package for America's farmers comes at a critical time. These direct payments will give producers the breathing room they need to market this year's harvest and plan for next season. This serves as a liquidity bridge during a period of adjustment, supporting the strongest agricultural sector in the world. Add this to President's success in reining in Biden-era inflation, thanks to the administration's pro-growth policies. Input costs like fuel, fertilizer are easing, and credit conditions are improving. Interest rates are coming down, helping farmers prepare for the next harvest. President Trump scored a massive victory for America's farmers when he secured an arrangement with President Xi in Busan to reopen China's markets to U.S. agricultural exports, especially soybeans, sorghum, and other commodities. Under this framework, China committed to purchase at least 12 million metric tons of U.S. soybeans this growing season, followed by a minimum of 25 million tons annually for the next 3 years. And it's not just China. At the president's direction, Treasury, USTR, and the Department of Commerce have secured supplemental purchases of U.S. agricultural goods in major trade agreements.
All right, I just don't care too much about this specific topic. But the triple Qs are down 0.4%, pretty much holding that price for the most of the day. We've seen a little bit of fluctuation, but it's really been in that same sort of range. The SPY also down 0.4%. They were not tied at the beginning of the day. They're now tied in performance today. But yeah, the soybean futures you guys are talking about. Is Amit doing a market close? I don't know. I texted him. He hasn't even read the text yet. So I think he might literally be sleeping, which is good. Hopefully he feels better soon. Yeah. All right, let's check on NVIDIA. I think they're going to Q&A. Let's see. Okay. NVIDIA completely sold off that China H200 bump. Let's do the Q&A here.
Really fast. Yeah, sir, the farm economy, you always ask me to just get a few numbers to put it in perspective. And as I've looked through the incredible performance of these people that work so hard and are such important people for keeping communities alive, the thing that struck me the most, because you and I were here in the White House during COVID, is that during those terrible COVID times, farm production didn't go down. Like these farmers, they went to work every day and they produced so much. But then Joe Biden came in, so we had COVID and farm production didn't go down. And then Joe Biden came in and he really wrecked the farm economy. And so during Biden's term, 150,000 farms closed, sir. 150,000 farms closed after we went through COVID and we didn't have a problem. Now, why did we do it? Why were we able to do that? I'm going fast. The first is that, do you know that expenses for farms fell 5% while we were here because of all the things that we did, expensing and everything else? But under Joe Biden, they went up 13% because of all the regulations, energy, everything else. But the thing that really jumped out at me the most is because you had high growth and low inflation. Interest expense for the farm economy fell $120 million per year while you were there in the White House. But under Joe Biden, it increased by $8 billion per year. And so you wonder why it is that we need this $11 billion, maybe $12 billion to build a bridge loan to America's farmers. It's because we know how to fix it.
I'm about to fall
But
asleep.
there really was a hole that was dug in the previous.
Not just him, it's me.
It's fast enough.
Good. That was quick. That's good. Appreciate it. Senator? Please.
Yes, sir. No, thank you so much. Thank you for convening us this great announcement and all your hard work for farmers. I think I was reading the clips and I think, yes.
Okay, whoever lied about the fact that we're not getting an AI executive order or anything along those lines, or even conversation about the markets or anything, I mean, immediate ban. Okay. Oh, I just suffered through a bunch of farmer talk. Okay. Not saying it's not important. It's just not my field. I leave that stuff up to that field. Okay. Let's see. SoFi. There's no nothing's happening with SoFi, dude. We just sort of reversed the bad day. Which, by the way, I did end up selling PayPal to buy just a little bit more in SoFi. It's not going to make any sort of material difference, but bought a little bit more SoFi today on that dip. It's crazy how much the stock has sold down on that dilution news. So it looks better. But yeah, we'll see. Now that I've put it up on my screen, it's bound to go down. So enjoy. VZ saying SoFi looking nice, as if you didn't just tell me that the AI thing was happening. It's you, the guy that is getting the ban. I'm talking about you. Mods, don't ban him. I'm just kidding. All right. I literally feel 2 energy levels lower than before that talk. I need some sort of boost. Let me go through, make sure we have one last round of checking if there's any news. I'm already starting to feel better, by the way. I'm livening up as we speak. The day is filled with these H200 news stories we already covered, Apple chip stories we've already covered, the Paramount Netflix deal. We'll see what ends up happening. We're going to cover it in real time, but until then, nothing new to cover there. I did end up hearing about, let's see. Was this something? Okay. Let's watch this. Tom Lee, ladies and gentlemen.
Oh, look, Tom, there's all this stable coin growth and there's all these L2s, but they're not generating fees for the L1. So therefore, the L1 doesn't accrue value. That is the same as someone saying in Facebook, okay, when Facebook launched mobile, well, Facebook, you're not charging any money for people to actually do mobile. You're actually just, it was free on the desktop, it's free on the mobile. And maybe you can sell 10% more ads on mobile, so therefore it's not really beneficial to Facebook. Do you realize how wrong people were about that assumption, right? Because basically Facebook is a UGI company. So the more people that use it, the more valuable it became as a platform for advertising. And of course, the network effects kicked in. And then today, Facebook dominates all the advertising business, but that was not evident in 2007. L2s, it may make sense, especially on Ethereum, to let the L2s grow, create a huge ecosystem, and not charge direct proportionate gas fees. Because if this is where everything is going to be built, then the L2 is going to accrue significant value. I think that I think it's really absurd when people say you could have 10 trillion of stable coins and it's not going to benefit ETH because look, they're not charging any fees for that. That's basically Facebook's strategy, right? In 2007, they want to become the standard. So they really want everything to scale, and then they can always modify this business model later to accrue value to the L1. If an Ethereum blockchain captures 70% of all RWA and someone says it's not going to benefit Ethereum, that is someone who actually is using the same logic to say new technologies and new applications don't benefit the new entrants. In fact, as you know, there's a lot of people in Bitcoin that don't think there's anything other than Bitcoin that exists. I mean, there's so much tribalism. When people say L2s don't benefit L1s, that's a tribal view. I'd say I've had the same people that tell me in the macro world, S&P shouldn't go up. The AI stocks are expensive. Quantum makes no sense. I've heard every negative argument for the stock market for 30 years. And I think people get into the same trap.
I mean, that's true. I'm not sure quantum makes any sense, but no. Come on. But yeah. Anyway, let's do a little thing different than I usually do. I'd love to hear how your guys' weeks have gone or weekends. Any significant accomplishments or anything? I'd love to hear from you guys if there has been any significant wins for you. Could be financial, could be otherwise. For example, and this is very small. I kind of want something bigger than this, hopefully from you guys. But for me, I achieved my longest dead hang that I've done, which just means that I'm holding onto a bar and my arms are fully extended and I'm just hanging there with my legs off the ground, of 1 minute and 56 seconds, which for some of you is not that long. For me, that was the longest I've ever done. That was my win of the weekend. Went to the gym today. Nice. Great. The weekend, the casino's closed, so there can't be any wins. No wins, only losses. I placed my first option. Good luck to you there. Do not get into too, bad of a habit. Ate 2 lunches. That's good if you're trying to gain weight. Being with my family. Lazy answer. Come on. You got to get those numbers up. No, I'm kidding. That's amazing. What do you think about day trading the NASDAQ? I don't day trade anything. Try pull-ups with resistance bands. I can do pull-ups. I would honestly say more than the average person. But, dead hangs are extremely good for your shoulders, and I have terrible shoulders. I've had some pretty good injuries, so dead hangs are just amazing to keep my shoulders in place. Went for my first boxing class. That's amazing. Congratulations. Went up 40% on your rubric investment. Amit has not answered me. No. How many pull-ups? Probably somewhere between 15, 20, something like that. Like real pull-ups going all the way to the bottom, like ending it and then coming back up. I don't weigh a lot though. I'm more on the skinnier side. So at 5'11", I weigh probably about 183 right now. Show us. I don't have a bar here, but I've got a bar in the basement. I've become a Tanner member. Welcome to the cult, brother. Happy you're here. I started deadlifts today. Amazing. Benjamin, great. I do not deadlift nearly as much as I should. Basement stream? No basement stream. You serve as drinks at your bar? No, not that kind of bar. No, I just have like an unfinished basement with a bunch of gym equipment in it. You're 5'4" and 120 pounds, don't lie. I think the pictures with myself and Amit and sort of these would maybe disprove that a little bit. Added an employee to the office. Is that like one of the first employees? Because that would be crazy. I turned my garage into a gym over the weekend or just in general. How tall is Amit? I don't know. I thought he was 5'6". He is adamant he's 5'7". No, 183 pounds, not kg. Oh my gosh. No. How much is 183 kgs? Close to like 400 pounds or something, right? Always at an inch. One-off question. Steven called about the Paramount thing. What was the episode in the car giving us the run? Oh, I have no idea. Where's Amit? Amit is sick, I think. Had the most amount of sales for my gym brand this past weekend. That's very exciting. No, the gym equipment that I've purchased has like almost exclusively been from Rogue, or I have like Bowflex dumbbells and stuff like that as well, but Rogue's been the gym brand that I've been closest with. Rogue is fire. And it's not too like crazy expensive or something. Like it's decent, it's really high quality, but you're not like paying for the brand or something. Like what's that crazy like Italian brand that everyone's really interested in too? It's like Renata or something like that. Is it Renata? I'm going to get it wrong, but like that stuff's insane. I don't think I'll ever be buying that kind of stuff. Take your shirt off, or will YouTube flag this? I'm just not about prostituting myself like that. Panada. Yeah. I think Dookie Pie had offered me like $10,000 or something to take my shirt off on stream, and I denied her. So Panada, not Renata. Panada. Yeah, you guys are right. Yeah. For vitamins, I don't do anything too crazy. I take a multi. During the winter, I take 2,000 IUs added for vitamin D. I take a B complex and a omega-3 like fish oil pill. Yeah. And then for protein, I'm kind of back and forth. Right now, I'm actually doing a pea protein, which is actually less protein, but it's not whey protein is dairy, and I'm no good with the dairy products. So if I have like what do you call it? Lactate or lactase, then it might work, but I just don't take that with my protein. I do not take creatine. Not that I think that it's dangerous or anything. K2 is important. I think the K2 is a part of my D3 pills. I think they're lactose is the thing that I'm intolerant of. So whenever I take in lactose, I need to match it with lactase. If I'm not mistaken, I'm no health expert, but I'm pretty sure that's the problem, right? Is that if your body does not have enough lactase to break down the protein, then that's what makes your stomach upset. But if you take a pill, which is the lactase that like bonds with it, then you're fine. So that's all like my understanding is like the lactose-free milk and stuff, they just add the lactase in. It's just like a powder. You can just put it in, and then that's how they balance that out. I don't mind the turmeric shots. I like them. I don't go out of my way to buy them though. Like I take them, but I've never like felt like, oh, I feel better now. I'm just like, oh man, my breath is spicy, and that's it. Yeah. My fiance minored in food and nutrition. Let her on your stream. No, I prefer this to be an uneducated portion of the show where I just take a guess at everything. I would like to one day create like a show where I could just have people on the show to tell me what I'm doing wrong. That would be good. Yeah. I am lactose intolerant, yeah. Okay. Get yourself I do have a walking pad. Just not at this desk. This desk does not have the standing ability. I actually had a company reach out to me and say, hey, can we give you a desk? But I turned them down. But yeah, I do have a walking pad and everything. I do have a standing desk, but they're much, much smaller, and they're in a separate room. Okay. I play tennis regularly, so creatine is a must-have, or else I'd be minuscule. Wow. All right. Where's that Herman Miller sponsorship? Nothing yet. That one I will take a sponsorship from. I'm already giving them a sponsorship. Herman Miller's the greatest. Plus, the squeaks on my chair are too much. I do 8 grams of creatine a day. I think that's the normal dose, right? I know of some people that double it up and do like 14 grams for a little bit, but I don't know. I don't take it, so I don't personally have an opinion on it. Okay. Are we pumping? Is there market news? You lying? I think you might be exaggerating those claims a little bit. The SPY has actually just slightly fallen a little bit more. Should stream one day using the walking pad? No, it's not. It would be too low, or I would be too high for my stream. Like I said, the setup is not really made for that. And it's very loud, you know. It's decently loud. It would not be a good viewing experience. Okay. Lactose intolerance sucks. I'm also disabled like you. Yeah, dude, I never had it until like I was like, I don't know, 25 or something. And then I just started getting punished with it. And I didn't want to believe it. I thought everyone that had it before was just like faking it. But now it's like I put cream in my coffee. I'm dead. So no, it's real. Steve is disappointed in what? You're a Jordan Peterson disciple, right? I wouldn't call myself a Jordan Peterson disciple. I think that maybe some of the things that he says is very good, but I have a hard time listening to him because I can't unhear the Kermit the Frog type voice. So like, I'd rather read his book than listen to the audiobook, if that makes sort of sense. So I don't follow a lot of the podcasts. I don't know what he's doing these days. Yeah. Like, I'm not anti Jordan Peterson. He legit sounds like Kermit the Frog, and I can't unhear it. It's very hard. What kind of coffee do you drink? I am not selective about my coffee, but I'll tell you the best coffee is McDonald's coffee. I'd pick a McDonald's coffee over a Starbucks coffee immediately. Just black, no cream or sugar. You guys thought I was drinking, someone said I was drinking a bad drink. They thought I was drinking soda. I absolutely intake 0 soda into my diet. It was iced coffee because we had brewed it last night. So I just put it over ice. No, I'm honestly not going to allow this slander. Okay, McDonald's food is bad. McDonald's coffee is the greatest coffee. Tim's is trash. Tim Hortons is bad coffee. You seem like a non-alcohol kind of guy. Do you drink? No, I don't drink. No. It's not that I'm like anti. I took a year off from alcohol. So like in my here in Canada, the legal drinking age is 19. So like early on, whenever I was like dating and stuff, I was drinking and like going out a lot and stuff like this. And then I decided for my New Year's resolution that I was just going to take a year off from drinking. I took a year off and like went to parties and everything. I just still I had the exact same amount of fun. I'm just not that shy where like, I don't know. And I had a girlfriend as well whenever I did that. So same girlfriend I have now. So I never needed like alcohol or something to build up courage to do or say something or whatever. So like, I just never needed it. I took that year off. I was perfectly fine. And then after that year, I was just like, man, why would I go back? Like, to me, you drink, you might have a night of fun, and then it ruins the day after. So I felt like whenever I was drinking, I was like, this is like, for every hour of fun, I'm almost taking up 2 hours. Like I felt like I was like speed running through life almost. Like it was like taking away time from me because it would ruin my next day. So I just thought that the alcohol was almost shortening my lifespan. Not only was it actually impacting my potentially, my lifespan, but just the next day that sort of hangover, not great feeling, the sluggish feeling was just not worth it for me. So, whenever I tell people that I don't drink, they think that I have a problem. And it's like, no, there was no problem. It was just a matter of like, okay, well, let's have a great, like my favorite thing to do now is I'll go to a party or something, enjoy myself. I'm extroverted enough to still have a great time. And I usually just hang out with my friends and everything. So there's nothing that's needing myself to build up courage to hang out with people. If you are socially introverted or something, you'll know what I'm talking about. And then the next morning, I would just get up and start my day on time, on schedule. I feel amazing. Does my girlfriend drink? She drinks a little bit, but she's more introverted. And she finds that, to have a glass of wine or something like that might allow her to have a better time. But also, like, even that, a lot of the time she won't drink or something like this. Like, I wouldn't call her a drinker because then that sort of puts a connotation on it. But a social drink, maybe. But, like, do we ever drink at home alone? Legitimately 0% of the time. I don't think me and her have ever had a drink together alone. Ever. I'm definitely into caffeine. That would probably be the big drug of choice. And my girlfriend's really into caffeine as well. We drink a lot of coffee. Not into the marijuana products. It's very legal here in Canada, but I just don't partake. Once again, probably the sluggish feeling. I just don't want it to take away my day. Don't want it to take away my next day. Yeah, that sort of stuff. How'd I meet my girlfriend? She was just friends of friends. I don't really know. Like whenever I think back to it, I just like always remembered like her sort of being in the friend group, I guess. If that makes sense. And she thought I was a dick. She did not like me. But then I grew on her because then I was single and obviously I was very attracted to her. So then once I started to pour the charm on, it changed her. She began to like me. That's funny. What are we listening? We're listening to the sort of markets are flat and there is no news, and I'm monitoring news. Trump threatens severe tariffs on Canada over fertilizer. That happened 1 minute ago. So that's good. The Canadian fertilizer talk is at all-time highs right now. Yeah, the pot and alcohol was never good for me. The trade-off was not worth it. Exactly. My girlfriend was the one to ask me out. I mean, that's the place to be. I'm not as lucky as you. You know, I don't think that the Ned Flanders of the world does so well on Tinder and stuff like this. So that's another thing. I never wanted to do online dating. Felt it very weird. I definitely thought that my advantage as a guy was, you know, humor or ability to talk. And so like in person was much better for me. Like bars and stuff like this were definitely fine, but like online dating never did me well. I do not think that my looks are my strong suit. So, yeah. My girlfriend, I would say, is introverted. Is Mitt going live? Not that I know of. I mean, maybe he is. I texted him to ask if he's doing the market close. He hasn't even replied. He hasn't even seen it. I think you're beautiful. Thank you, Noah. That's very kind. Okay. Are you performing better on the stock market after you've quit drinking? Well, see that that sort of like drinking comment assumes like I'm drinking every day. I never in my life have I ever drank alone or anything along those lines. So anytime that I've ever made a investing decision, I was never drinking to begin with. So no, I wouldn't say that. I'd say that my investing has done better as I've aged. And, you know, if it wasn't for COVID, I actually think we'd be in a different situation. But I think that COVID had really supercharged a lot of tech companies. And I was extremely, like, just all in on tech going into 2019 and 2020. So that had really supercharged my account. Now just holding on to those names are, you know, doing my portfolio justice. Actually, I'm not holding on to Tesla anymore, but I traded that in for NVIDIA, so that's doing well. Okay, it looks like Amit's going to be on at 8. the market closed. Like, we don't even have earnings really today. Let's see what else there possibly is. It's a quiet. Mondays and Fridays are usually the quietest, right? It's Tuesday, Wednesday, and Thursday. That's where all the news comes in. It's not like there hasn't been any news during the day, but it's, have we covered it over the last many hours that we've been live? Yes. Ooh, let's check this really quick. Little news in the crypto world. Let's hear about this.
Today, Bitcoin wrestles with the $90,000 mark to kick off the week. BlackRock files for a staked Ether ETF, and the Wolf of Wall Street's host, Scott Melker, breaks down what's driving the crypto market as we head into year-end. Welcome to CNBC's Crypto World. I'm Mackenzie Segalibs. Major cryptocurrencies are in the green to kick off the week as investors await the Fed's last meeting of this year later this week. Bitcoin, it's pretty much unchanged, still trading just below that 90,000 are in the look at that would trade on the NASDAQ under ticker ETHB. This would be in addition to BlackRock's other crypto-type funds, including its iShares Ethereum Trust that does not include staking. That fund was launched in 2024. Now, earlier that year, BlackRock and other issuers' spot Bitcoin ETFs began trading in the US. That opened the floodgates for other crypto ETFs here in America. Now, at the time, BlackRock's filing signaled major optimism among other issuers, some of which had failed to get a spot Bitcoin ETF listed in the past. Next, the SEC is closing another of its Biden-era crypto and Web3 investigations. Real-world asset tokenization platform Ondo Finance announced today that the agency ended its probe into the firm without any charges. Now, this move could signal a more welcome attitude toward tokenized assets in U.S. markets. In Ondo's announcement on X, the company calls the outcome an important milestone for the entire tokenization ecosystem. Ondo also said that it plans to hold a summit in February, laying out what's next for the company. Last, Binance landed a regulatory win in Abu Dhabi. Today, the crypto exchange announced that Abu Dhabi's Financial Services Regulatory Authority had granted licenses to 3 of its entities covering exchange, clearing, and brokerage functions. In a statement, Binance's co-CEO Richard Tang said that achieving regulatory status through Abu Dhabi Global Markets Framework reflects the company's deep commitment to compliance, transparency, and user protection. He added that the license provides regulatory clarity and legitimacy, enabling Binance to support its global operations from ADGM. Tang also said this regulatory foundation offers users peace of mind, knowing that Binance operates under a globally recognized gold standard framework. Binance's presence in the region coincides with Abu Dhabi's ambition to position itself as a global crypto hub. All right, back to markets for our main story. I spoke with Scott Melker, investor, analyst, and host of the podcast, The Wolf of Wall Streets, about what factors are driving markets right now. He also weighs in on all the new crypto ETFs coming up in the U.S., like BlackRock's newly proposed staked ETH fund. So Bitcoin, once again, bouncing between the low 90s and the high 80s. I'm wondering what your reaction is to Bitcoin's performance right now and what's driving this push and pull.
It seems to be that there are two camps right now as to what's happening with Bitcoin price.
Okay. The Wolf of Wall Street's, by the way, good channel, but I'm going to push off of that really quick. And someone mentioned that Dan Ives was supposed to be on CNBC. I actually do have Dan Ives up here. This was a little bit ago, but we can still talk about this. I can bring up the live stream. The only problem that I've seen with the live streams, the audio is usually quieter. So I'll try not to intervene with my loud volume, but let's listen in. But I apologize for the volume. I will keep it full volume, but it's usually still quieter than usual. Let's have a listen.
Christina, thank you. Christina Partsenevelos for more.
Oh, and it froze. Okay. But you can hear just how quiet it is. It's so quiet. Why is it loading? Oh, good. That's good. Thank you.
Shares jumping off the belt. Bush start
of what's going to manage and for fun. And
for more, we are joined now by Wedbush Star analyst Dan Ives. It's good to have you here. How significant is this?
It's a watershed moment if it plays out, and I believe it will. Look, I mean, our whole view is you don't want to give Huawei and China Tech more power. But by taking NVIDIA out of that market, that's what they've done. And with that, you're talking about what could be 15, 20 billion a year. And I think this shows, and we've seen it being in DC a bunch the last few months. I mean, you're seeing changing winds there. I mean, there's a recognition that you have to give NVIDIA that market. You have to let that open, because otherwise China Tech gets an advantage. And for the first time in 30 years, US Tech is ahead of China.
Well, first of all, you call it a watershed moment. The stock's up 1%. I mean, really? Watershed? Stock's up 1%. If it was such a watershed moment, wouldn't the stock be up more than 1%?
No, I mean, look, I view it as we go into the coming weeks, we're going to look at this as more and more China opens up. Even as Trump's going to do the visit there in April, I think this is more the tea leaves, because I view it, this is just the start of what's going to be an opening of that relationship. And I expect more and more NVIDIA is going to be able to sell into that market. And that's not baked in. I mean, if you start to think about from a street perspective, the view is China very, very cautious. I'd say negative in terms of what that's going to ultimately be. I'd say the street's underreacting to what I believe is really going to be an opening up of what's going to be a golden opportunity for NVIDIA.
Christina laid it out, though. It's China could very well be like, thanks, but no thanks. I mean, the market seems like it's not willing to take a big leap forward, because there are many things that are still at play.
Yeah,
not to mention the fact that these are already like.
Yeah, I told you guys it is quiet. I don't even care to almost listen to this in a way. Like, we know what he's gonna say. He's super excited about this, but I also think that the just saying it's up 1% is kind of not giving it enough credit for how big it could be. I think it's just, the truth is the market doesn't even believe that it's happening. Okay, they're not pricing in 1% as the amount of China growth that we're going to see from H200 chips being sold to China. We already know that, right? But it's just a matter of this, if the CCP will even allow that product to come into their country. Yeah. Tanner, you're still streaming. I took my lunch, came back. You're still here. Yeah, I know. We're just having fun. It's a Monday. You know? We're chilling. Markets are also being pretty lax right now. S&P down 0.5%, NASDAQ down 0.3%. Okay. That being said, I do think I'm going to go. Appreciate you guys spending this time with me over the last 3.5 hours. Getting to not just talk about markets and the things that we're investing in, how we're rotating our portfolios, the new news, but also getting a little off topic and talking about, some health stuff, some life stuff, some relationship stuff. I think that all those things are very important. Literally, like to me, those are like the 3 most important things that I try to focus on is health, wealth, and relationships. And so getting your guys' advice as well is always, very helpful for certain things. And we've created quite a very interesting community. Yeah. Grateful. Extremely grateful. Yeah, some drug stuff. Quick thoughts on soybeans. No soybean thoughts. But until next time, bye for now.